Good morning, traders. Welcome to NinjaTrader Live. I'm Maggie Lake, filling in for Anthony. Joining me today, Senior Economist Tracy Shuchart, Senior Macro Strategist Craig Shapiro, and Senior Market Strategist Jim Cagnina. Good morning, everybody.
Good morning, panel.
Good morning.
Thursday seems a little bit like Groundhog Day, though. Headlines out of the Middle East seem like they're shaking things up a little bit here in the morning. Oil up, which means yields and stocks down, at least momentarily. Headlines out of Iran are driving it. Engineer Bear in the chat. Hey, chat. I think put it best, saying, do not expect the energy complex to be your friend today. So it sort of seems like we're back in that kind of mood for the day. Anyway, Shai, let's get right to it. What is the latest that seems to have everyone's attention?
Yes. So if you were wondering what happened at 6:30 a.m. Eastern time, when we saw sharp reversals in oil yields and equities, the Iran's supreme leader has issued a directive that the country's near weapons-grade uranium should not be sent abroad. Two senior Iranian sources had said, hardlining Tehran's stance on the biggest demand from the U.S. in peace talks. Obviously, things sort of reversed on that because the Trump administration has stressed over and over that Iran cannot have any nuclear grade or any weapons grade or any uranium whatsoever. So we did see markets react on that headline. So again, everybody, there's still a lot of headline risk out there. We did have NVIDIA was beat yesterday, although it was down about 1% on those earnings. It is up this morning, though, came back up. We kind of talked about I talked about the flows yesterday afternoon and how that possibly could have happened, and it did. But they are facing some investor skepticism, even though it was a beat. So they've come out and said they've touted progress and diversifying the company, and to rely less on data center operators, and they want to move to other businesses and governments for another source of revenue. So that is kind of their pitch this morning. Then interesting, first we had Standard Chartered basically said they were laying off people because of AI. Then HSBC also said that yesterday. And then we have Jamie Dimon, but he took a little bit of a softer tone coming out. And he said that the company will likely hire more artificial intelligence specialists and fewer traditional bankers. He said the AI-driven transition can largely be managed through a natural turnover rather than sweeping layoffs, and that it will also create new roles, particularly in client-facing areas. He did warn that if transition isn't handled with care, it could have negative consequences, and society needs to think through the potential effects of the shift happening too fast. He also was out talking about rates. He said interest rates may climb much higher from current levels, a warning to bond investors at a time when yields have touched multi-year highs. So he's another one coming out. Citibank said 5.5. Now you have Jamie Dimon coming out and saying he sees rates significantly higher. We have the U.S. 30-year at about still over 5%, 5.14% this morning. Goldman said that hedge funds have actually been selling this scorching rally in U.S. semiconductor stocks to book profits while keeping their overall exposure to AI, to the AI theme. And I think we saw that earlier this week when we saw semis sell off there for, a good two and a half days. At the same time, the funds increased their short wagers on U.S. equity macro products, index and exchange-traded fund instruments used to hedge against broader market risks. These short positions are now at a 10-year high. We had earnings today. John Deere was a beat, but it is down 3.1% in pre-market. They topped earnings expectations, but it was on it was on construction and forestry segments, and they're still seeing a kind of a dent in the agricultural markets with, they are the biggest farm machinery maker, so they are worried about the agriculture sector. And then Walmart also came out this morning, also down on, they were a beat, but their Q2 earnings forecast did disappoint. They did warn that fuel is weighing on their profit margin this quarter, and they assume that's going to continue to Q2. They're down 2.5%. They're dragging Target down with it. But interesting, we talk about the K-shaped economy. They said the high-income consumer is spending with confidence in many categories, whereas the low-income consumer, we can tell, is more budget-conscious and trying to navigate certain financial distress. So kind of a warning from the retailer about that lower portion of the K economy. We had PMIs out from Australia to Europe, pointed to an intensifying ordeal for manufacturing and service companies in May. In particular, factory activity, as measured by S&P Global, slowed or even contracted across the board. Just a note on that, it was really ugly. It was really, all those PMIs were just really ugly. At 9:45, we do have U.S. global manufacturing and services PMI. So that's going to be an important number just to remember, 9:45 a.m. Eastern time. And then last but not least, we have SpaceX. IPO has filed for their IPO, revealing losses of $4.3 billion so far. And they have a goal for a human settlement on Mars with at least 1 million inhabitants and making data centers and space a reality. So there you go with that IPO. And then as far as data is concerned for today, we have at 8:30, we have initial jobless claims, continuing claims, Philly Fed, housing starts, and building permits at 9:45. 9:45 is going to be important, you guys. S&P Global Manufacturing PMI and Services PMI. And then at 11, Kansas City Fed Manufacturing Activity. So 9:45 is where you really want to focus on today.
All right. Wow, that's a lot of stuff to digest and filter through. Craig, I'm going to give you the hard job. What do you care most about today? Where's your focus as we at least kick off the morning?
Well, first off, I did see this article about more Americans are looking to leave the country because of cost of living issues and future employment concerns. And Mars doesn't sound like such a bad place, I guess, at this point. So maybe
it's cold as hell, according to Elton John.
A trend for some. But look, I mean, I think we are, we're getting to this end. We had talked about this concept of a three-stage, trade here with respect to the geopolitical, right? The first trade was down on the elevated tensions. Phase two is the counter trend move on the relief rally that things are, we're not going to go into a nuclear war. The world's going to continue to move on. And we've kind of approached the end of that phase two, and that would be culminated by whatever deal, eventually a deal that takes place. And then we move into kind of phase three, which is, okay, what does the world look like on the other side of this dynamic? And that world is one of still elevated energy inflation, a supply chain that remains strained, a low-end consumer that is continues to be stressed. And then what we've also seen over the course of the last several weeks is continued stories, and Tracy mentioned them all this morning, about labor displacement coming from AI. And so those are the trends that continue to exist and what the dynamic looks like for the back half of this year. And eventually the markets are going to wake up to that reality, that economic reality, and start to trade it. And so you're seeing that a little bit this morning with the European PMIs for the month, really coming in, quite abysmal, because Europe is really at the foreground here of elevated inflation, imported energy, and slowing growth, and an ECB that kind of has to be hawkish to deal with its single mandate of inflation. It becomes a problem, and you're going to see that elsewhere in other areas of the world that have imported energy inflation as well. And so, I mean, in the U.S., we know that we have this bifurcated economy. The AI-related CapEx stuff continues to do incredibly well. The NVIDIA numbers last night were blowout again. And so I imagine the relative, strength of NASDAQ versus the rest of the areas of the economy will continue. But we've come a long way here. And as we've been talking about all week, so many of the supportive flows from options expiry week are behind us now. The NVIDIA print was a big catalyst. The vol was elevated for that day as well. So now we kind of can see perhaps a market that trades more correlated. Earnings season's officially behind us. Markets tend to trade in a more correlated fashion after earnings season is over. Dispersion is very high. Correlation is very low. Expect for that to start to reverse. And if for some reason we get elevated geopolitical tensions again, then we're going to go back to the same kind of concerns about this inflation lasting for longer, the bond market continuing to be weak, the dollar remaining strong, and those pressures on the lower parts of the K-shaped economy and small businesses remain. And that's something the markets are eventually going to come and start to have to digest.
Yeah, I think Lynn Alden was just recently talking about like it's two totally different economic planets right now, right? You've got that sort of, as you mentioned, that you talk about bifurcated a lot, and we all do, right, when it comes to the consumer and to the economy. But like they just seem like on such separate tracks. I guess the question and what you're talking about is do they meet? Like, can they stay on different tracks, or are they eventually, is one going to have to meet up with the other one? And that's sort of an open question, but it seems like where the strain comes. Jim, what's on your radar? What's catching your eye this morning as we watch that reversal take place at around 6:30, as Shai mentioned?
Yeah, I mean, this news-driven day trading phenomenon is really, really accentuated. We saw it yesterday with traders just chasing direction left and right when different news items hit the tape. We saw it this morning. Crude was kind of selling off really nicely here, suggesting, hey, maybe there's going to be some kind of compromise going on. I mean, we were all the way down to low 97 handle in crude oil. And then just with the snap of the fingers, we're back over $100. That's a $3 move. That's a pretty big move. We're still at only about 58% of the average range so far in crude, but I expect that kind of thing to continue. And why it matters is these correlations in most of the markets are pretty strong. Bonds, crude, gold, all of these things are correlated very closely, negatively correlated very closely. So when crude moves, all of these other commodities are moving, and they're moving almost sometimes irrationally based on the supply and demand realities of what we're facing with copper and gold and silver and those kind of markets. So you got to be really, really careful from a day trade point of view. The only markets that don't seem to really care are the equity markets. They're both right at their ADMAs. There's no retracement in sight. So those are the outliers. Like but equity markets, like, hey, hold my beer, we're okay. But you still have that volatility though. So you put your stops in, and micros are your friends today.
Yeah, I mean that the role of the commodity is why Shai gives us our reality check every morning, that we have to really pay attention to where you have to be watching these markets no matter what you're trading. Shai, there was another headline that crossed this morning, and I wanted to ask you about this anyway, but that just kind of put it into sort of into the red zone for everyone. We had the IEA chief out saying oil markets could enter the red zone by July. I've heard people talking about June as a really important, period that we're entering. Why is everyone so focused on this? What are they talking about?
Well, I think right now we've had the biggest drop in U.S. oil inventories that we've ever had, the biggest draw this Wednesday when they reported yesterday, over 9 million from the SPR, plus over almost 8 million from commercial crude stocks. That is the largest draw in the U.S. So exports are going out. Globally, all of the floating storage excess that we had is drained from the market. And this is getting to be dire because we're also entering a period where you're going to hit summer. Summer demand is higher globally for driving, et cetera. Summer demand in the Middle East, they actually use oil for their air conditioning. And so you have more demand from them domestically. So that's less oil for exports. And And so this is going to be, this is going to be a big problem. And there's seemingly no resolve anytime soon. And you have to realize also we have 11 million barrels, and that includes natural or LNG, natural gas from Qatar, literally production offline. And you're not going to be able to restart those facilities with a snap of a finger. It's going to take months. In fact, we had UAE come out yesterday, and they said maybe, if the Strait opens tomorrow, maybe by the end of the year we get 80% back, and maybe we get the rest in Q2, Q3 of 2027. So this is going to be a long process. I think people are kind of discounting that. But yeah, we're hitting summer. It's going to be a tough time.
Yeah, and Craig, I think one of the reasons I love Jim saying the equity market is just like hold my beer. But one of the reasons it's in sort of certain markets or pockets have been able to do that is because we haven't really seen that demand destruction that everyone was waiting for. I think Shai just laid out we kind of had a buffer to help through that. In the U.S., certainly in parts of Asia, I think it's more. They're feeling it more acutely, and it could get a lot worse. I mean, I'm hearing that's where it's going to get really bad first. But are we going to, if that plays out the way Shai just said, do we start to see that demand destruction? Are those sort of Walmart headlines that we're seeing today an indication that maybe that's coming? And does it make it more real for equities if that's the case?
Yeah, I mean, I think so. I think, the U.S. has these relative structural advantages about the U.S. energy independence and what natural gas has been able to do here, but also the inventory levels. But you're right. If you look globally, I mean, look in Indonesia, currency is making, all-time lows against the dollar. It's happening in India similarly, multi-year lows against the dollar. You're seeing in dollar yen, pushing back close to 160 again, massive energy importing region, and five-year inflation break evens in Japan are at 30+ year highs. BOJ is going to have to react to that. So the areas of the world where you have the energy imports are feeling it much more acutely, and the U.S. has had this buffer. But the low-end consumer, there is no buffer, and so as we push through the summer and gasoline is $5+ and food inflation comes back in the fall, it's going to just continue to be pounding on the low-end consumer here, and you'll see it, on the periphery. You got it in some of the Target stuff and the Lowe's stuff, Home Depot, right? The top line numbers are coming in, okay, but there's definitely some margin degradation there as well for these names, and so I think that's you're over the course of the next, several weeks and months, you're going to continue to hear headlines about a strained consumer and what kind of impact it's having. You're seeing it in the TSA checkpoints are running down year on year for airline flights. So I think it's continues to be on the come here.
Yeah. Jim, it's tough if you're a day trader because you're kind of operating in that, like, what do I care about any of that, right? Craig just laid out a great dashboard that he's watching all this stuff, and we talk about it because it's kind of the risk closing in on us, but it doesn't seem like it's here yet if your focus or your time horizon is day to day.
Yeah, but the thing that's a little different now is with these big kind of violent moves across all the asset classes, it's harder to pay attention and to participate in more than one or two markets at the same time. Mm-hmm. If you're in there trying to trade 3 or 4 markets, like maybe Jack does, it's hard to keep your eyes on all the moving parts, even though they're either positively correlated or negatively correlated pretty significantly. There's still nuances within the chart. So, my advice is, hey, let's stay focused on 1 or 2 markets and become experts in that while this thing is all kind of flushing out, because just one piece of information, whether it's true or not, could cause a spike, a big giant wick, and cause all sorts of trouble when you're trying your position. So that's the difference for me anyway that I've experienced this last couple of weeks. Focus on 1 or 2. Don't try to focus on 3, 4, 5, or 6 markets if when you're in the heat of the battle and you're day trading. So
yeah, no, that's great advice. And it's a reason that we talk about all these other things because they have the potential to blow you out if you're not paying attention. And so that's why we kind of want to cover the risk and opportunities out there.
Yeah, and Maggie, if I could mention, we have a real special event later on today. This is the launch of a new show, Develop Your Edge, And today at 4 p.m., after we're done trading the close, we have our very first episode with that good-looking young man up there on the screen. XYZ is going to be with us, and he's going to basically talk about how some of his key setups, how he uses volume profile to kind of frame the conversation, and how it helps him with his trade ideas, exits, entries, and all that stuff. So that's at 4 o'clock. It's an hour long, and it's going to be interactive. So bring your questions, whatever they are, and I'll feed them to XYZ. It's going to be a lot of fun.
That's amazing. And we have a lot of people in the chat saying some really nice, awesome things, which we appreciate about how much they've learned and how much better they're getting at doing this by tuning in every day. So super appreciate that. And this show is just another example of, what everyone here is trying to do for you folks. So that's awesome. We also had a great comment from Lucky Dog. Please put all the data centers on Mars. Forget about the people. The data centers there. No, that is a fantastic suggestion. And I saw somewhere Elon, something's going on Mars because I think his payday on SpaceX is linked to that. So something is going to get on Mars. That's for sure. Speaking of all of that, we've been talking a lot, as we should, about the commodity complex and oil because that's leading, and we're going to do it again with a guest coming up a little bit later. But I also saw an announcement. We've got quantum stocks on the move again. They had their sort of moment in the sun a while back, and then everyone kind of, I think, sort of went back to the semis and sort of fell out of love. But supposedly the U.S. is reporting or is planning to sort of, it takes stakes in some way or another, awards or funnel money there. Are we taking that seriously, Craig, or is that just yet another headline from the Trump administration? And let's see what actually happens.
I'm laughing looking at because I hadn't heard that headline until you mentioned it, and so I just pulled it up here, and it looks like one of the names is going to get $100 million. I mean, yeah, great for that company, but it just seems like such an insignificant amount of money. A nice headline for the Trump administration. But look, it's having a huge impact on Rigetti this morning, stock trading up 10-15%. So I guess, the Trump impact has massive leverage on other companies. We obviously saw the gains that the administration has made with their Intel stake. And so, look, I think investors like to know that the president's on their side when they're investing in idiosyncratic single stock ideas. And so on the margin, is this helpful for the industry? Sure. It's been a sector that had been incredibly hot last year, has really kind of gone through much of the mania blow off, and now has kind of been trading in the dumps now for the last 6+ months. But I'm sure it'll be something that we're going to be talking more about over the next quarters and years as we move closer to that. But again, I think people have been looking for secondary and tertiary plays to catch up to the AI CapEx theme. And so when things are, kind of as depressed like this, you kind of get these moves kind of at the tail end of rallies often, right? You get, the good names go first, the second names, and then you're kind of at the back end there. We get some of the dregs and the drabs kind of, bringing up the rear. I think this is some of that dynamic here as well.
Yeah, fair enough. Yeah, that it's going to be interesting to watch, and I'm really interested in Tracy mentioning that little comment from NVIDIA about diversifying. That's going to be. I think we're going to hear a lot more about. That's a great flag, Tracy. I think we're going to hear a lot more about that and what does that look like, and is it enough for investors? Okay, fantastic stuff. Well, we know what time it is. Time for this morning's Edge Report. So take it away, Jim.
All right, let's continue the conversation with crude oil. I have an intraday chart up, but I have 2 days back to back, yesterday and today. And, we had a really pretty big sell-off yesterday, if you think about it. I mean, we went from 104.43 to a peak low around 96.90. So that was a significantly large move down. And we ended up with a little bit of a wick on the daily at the bottom, but we pretty much were sideways today, and everything was looking really, really, really rosy. When I say rosy, I mean, look at the London IB. We just sold off really, really nicely. Here's that news spike. So we hit a low here, 97.57. News comes out. Boom, that was worth $3. I mean, that was a big kind of move up. So there are still some key levels for today to consider on an intraday basis here in crude. So right now, the point of control is kind of sticky. This is a weird kind of volume spike right here. It's kind of framing the top of the conversation right now. This is where resistance is sitting so far. Again, we're bumping up against it, and that's at 101.08, give or take a couple of ticks. Above that, we have some nice targets. We have that 1 day max. I've been talking about this. Mentor Q levels, 1 day max, 102.77. If we do break through to the upside here, again, depending on the news cycle, and then above and beyond that, we have that 0 DTE call resistance and gamma wall all the way at 103, and then R1, right? R1's pretty far away because yesterday's range was so big. It gets spread out. If you keep on going, we have previous sessions highs at 104.44 and then call resistance at 105. If things turn around back to the trend the way they were and we break through that session VWAP, which is kind of in the middle of the range today so far, we do have a target here at the bottom. We do have the previous session's lows at 96, 90-ish, give or take a couple ticks. 0 DTE put support at 96.50, and then there's your S1. Below that, we do have that 1 day min. Again, it's a 1 day min or 1 day max calculation that frames the bigger moves. 93.73. Should we get any kind of relief? My guess is we're probably heading up a little north. I do expect some kind of rebuttal to happen after the Supreme Leader's pronouncement that they're keeping their uranium. Let's shoot over to E-mini S&P real quickly here and check this guy out. Now, let's go to the daily chart, though. Look at that 8 EMA. I mean, this has just been marching up along that 8 EMA on a daily chart ever since the beginning of April, and it's been a nice, steady, well, maybe even not steady, a nice kind of move up here, strong move up. And right now, we're right at it, right? We're just kind of dipping our toes underneath that 8 EMA. We only have 1 day that closed below it. Yesterday, we closed above it. So it looks like a little consolidation possibly forming between 7,450 and 7,400 right now. We'll see if this thing continues to march upward. Now, this may open at 72.58. We never got down there. We have not retraced back to the 23.6% retracement, which aligns with that May open. So right now, we'll see. It looks a little bit like we're going to consolidate a little bit. RSI is kind of slowing its roll here, kind of in the middle of the pack. Let's take a look intraday to see what kind of targets we may or may not be excited about. Well, right now we're kind of trading toward the bottom of the range here. We're about 73% of the average range, so we have a decent move so far. Sunday's open is at 74.10. That's something to consider also. High vol, this is where gamma kind of shifts back and forth a little bit. 74.05 on the downside. We'll continue selling. We got that 1 day min at 73.85, and below that is S1, and below that is previous session's lows at 73.56, and again, right above that 0 DTE put support at 73.50. If we kind of break out above that VWAP here, start to make some progression up to the top side here, and we're in a bull market. JAX 2, 74.75, kind of an odd number for a JAX level, but that's where it's at, and it's right next to R1. So there's two areas of interest right there. So if we get any kind of spark to the upside here, I would expect that to kind of be tagged today. Above that, we have that 7,500 call resistance level as well. And just show you the daily and the bond chart really quickly here, just so we could put this in perspective when we got data today. So we're going to cut back to the panel. Yields around 5.13, give or take, right below the 8 EMA, right? And we're not getting any traction to the upside here in the 30-year Treasury bonds, even with the bullish engulfing yesterday. I'm looking at that May 22nd, 110.01 target on the downside. That's this morning's Edge Report. Back to the panel.
All right, Jim, thanks so much. We have weekly jobless claims coming out. Tracy's going to shout when she sees the number. I guess, Craig, the question is, listen, people care, consumers care. We see it in sentiment. People are worried about jobs and AI. When are investors going to care?
Yeah, I mean, it's going to take a non-farm payroll report that really kind of smacks people in the face, I think, for investors to really care about this. And so, I don't know. I mean, it's not, we saw it in the ADP weekly stuff has been pretty good for the last several weeks. And so, it's not clear exactly, but it is coming. So, you'll have to see. But importantly, though, for me, on a personal note, it's a great day for the Shapiro family. My daughter Dylan is graduating high school today. It's high school graduation this evening, so incredibly excited about that. Wanted to give her a shout out this morning, and she's going to the University of Tennessee next year in the fall. She's going to be studying nursing, so incredibly excited. It's a great day here. Great day for Jim on the island. Great day for me here in Naples. So it's going to be it's going to be a great day in markets also. Everyone's going to have their happy face on as we head into the Memorial Day weekend. I know, look at that. Everyone always complains I'm too dour, I'm too downbeat. So wanted to give a little change of pace today for this Thursday morning.
I love it. Well, congratulations to her. That's amazing. Tennessee's lucky to have her. It's a big deal. I think like they're joyful and marching into the future. I've got a senior too, but he's got another month. We're up north, so he's got a little more time to go. Not quite a month, but before he graduates. Yeah. But we're all massively stressed out about what AI means for their future. Right. They're okay for now, but we're worried
jobless
about it.
Jobless claims came in line. Survey was 210,000, actual 209,000. I mean, it's kind of been in this range for weeks and weeks and weeks now. Continuing claims in line, 1.782 million. So no surprises there. Philly Fed Business Outlook did come in at minus 0.4. Expectation was 17.8. So it came in negative. So that's not really good for the Northeast there. And housing starts, was prior was 10.8% and actual minus 2.8%, and building permits 5.8%. So
those are
that
a
Philly
couple
Fed
of those
Business Outlook. That's bad.
A couple of those are really off consensus. No.
Yes.
Well, bonds are making new lows, and equities didn't care.
Hold my beer, as you said, Jim. They don't care about anything until they do. So watch out. But okay, great stuff. Thank you, Jim and Craig. We will see you in the chat. Appreciate it. And before we get to our fantastic guest, let's look at a lineup for the day. In just a moment, we are going to be joined by Vandana Hari. Pharm is here for Tape Talk. As always, jump in the chat if you have any specific questions for him. Trade the Open is with Chris and Merritt Black. Midday Markets will be with Salma and Stowe. Trade the Close is Leo, XY, and Salma. And as Jim mentioned before, special at 4 p.m. XY is going to help you develop your edge. He's going to do a deep dive on his process and take live Q&A. So set a reminder. Somebody in the chat already said, I get to bug him for an hour and he can't go anywhere. Like, I'm in. So I feel like a lot of you might want to take advantage of that. So set those reminders. Okay, joining us now is Vandana Hari, founder of Vanda Insights. Hello, it's wonderful to have you. Thanks for being with us.
Good morning, Maggie. My pleasure. Thanks for having me.
Good morning. Last time we were together was in Riyadh, so glad to have you back on the show. Wanted to ask you, well, let's first just start broadly. Are you surprised that the oil markets, I mean, we've had intraday swings, but the oil markets have remained fairly calm, considering we are really starting to see that global excess that we may have had kind of drain from the markets, and seemingly no move on the Strait of Hormuz as far as a deal is concerned.
Yeah, good place to start, Tracy. I don't think I could ever say that it makes complete sense to me, the fact that prices are hovering around, if we look at Brent 107, WTI trading around $100 a barrel. We are into the third month of the war, the Strait of Hormuz remaining closed. If you discount the 4-5 million barrels per day Saudi Arabia is managing to send out via the Red Sea, another about 1.5 million barrels per day the UAE is able to export from Fujairah out of the Strait of Hormuz, you still have a gap every single day of about close to 13 to 14 million barrels. Now, the closest explanation I could come to, Tracy, is actually a combination of factors. So one is, I think the market seems to have drunk the Kool-Aid of optimism of President Trump's de-escalatory rhetoric. I mean, we see every second day he's alternating. And now he's saying in the same breath, he's saying we are close to a deal, we are in the final stages, and at the same time, we may have to attack them again. So one is, I think the market has had an optimism bias from the start that continues till today. I think there is also sort of a blinkers on. The market is so heavily focused on, okay, what happens the next few days, next few weeks, potentially Hormuz reopens and everything is good, kumbaya. I think the market has completely lost sight of the potential and most probable issues we are going to have in normalizing traffic through the Strait of Hormuz. Even if this MOU, letter of intent, what have you, does come to pass, there's expected to be a 30-day period of talks. Will Iran insist on having some sort of a control over the Strait of Hormuz? What will happen to the mines in the strait? How will the traffic pass? Will it have to be routed through the very narrow waterways next to Iran? So all those questions remain unanswered, but if I were to give market participants the benefit of the doubt, it's also that we are in an unprecedented shock. Nobody trading today nobody has ever in these markets seen this degree of supply disruption for this extent of time and potentially extending, right? So, you could say that if you wanted to be gentle and kind, is that market participants just don't know how to trade. And we know that, if people have just sidelined, it's just too risky to trade, especially when your gut feel says you ought to be going long, things are not looking far from rosy, and you go and you take a long position, and then a de-escalatory statement comes out and crude falls by 6%. What do? You're sitting in absolute red at that point.
Yeah, that's such a great point. And I just talked to a trader that has a shorter term perspective yesterday, and he said the same thing. Like, he wants to put those positions on, but he's getting wiped out. And then the chip trade revives, and all of the capital momentum and everything goes that way, and he's sitting in a tough spot. If you took that market dynamic out just based on the fundamentals, because it's unprecedented, we also have people like you who are telling us, and Tracy, what the reality of the inventory situation is and the disruptions, and people are choosing not to trade that. If you took the sort of trade momentum out of it and you just looked on paper at what you just described, where should oil be trading? What would be an appropriate price for oil if you took into account, even in the best scenario, all of the longer term disruptions?
Yeah. So the best way, I think, for me to answer that question would be to draw the attention of our viewers to the fact that basically we have not experienced the shock of 13 to 14 million barrels per day missing from the market, because that shock has been transferred to the inventories, exactly as you just mentioned, and Tracy was saying as well, right? Now, what that actually means in terms of physical supply and balances in the market is that we are borrowing from the future. We have dipped into this stockpiles for a rainy day. You could argue, well, it is a rainy day. That's a separate argument. But we have borrowed oil from our future. And what that means is, well, we are feeling comfortable today. I was looking earlier, just a few hours ago, at headlines from one European airline CEO after another saying, "Oh, we're not worried. There's not going to be any jet fuel shortages. Fly all you want in your summer holiday season." So the market has been lulled into a sense of comfort and complacency for good reason. We are digging a hole to make up the hole that is result of the supply shortage from the Gulf, we are digging a hole and borrowing from our inventories. And what that means is that we could well see prices remaining around current levels, which absolutely does not reflect the reality of 14 million barrels per day loss. But what that means is that we are going to be paying the price of this in the months to come. And mark my words, I'm very happy to go on record on this. Instead of suffering the shock of high prices, $120, $150 today, and curbing demand today, which is what would have happened if prices had been at that level, and keeping our inventories for an actual next rainy day, we are not doing that. So we're going to be paying the price with higher for longer oil prices. Unfortunately, God forbid, if you have a bad hurricane season, Atlantic hurricane season, what are you going to do? You're out. The US is running out of inventories, right? So we're going to be in an extended period, unfortunately, of high volatility because an amplified volatility from the smallest of disruption events, because we just don't have those inventories to fall back on.
And then I want to switch a conversation a little bit because we know that because of the deficits in the Gulf, the U.S. is now seeing higher exports, particularly LNG, but also oil. And from Asia, you have Japan, India, suddenly buying much more from the U.S. What happens? I mean, do those flows stay? Are they permanent? Or, when everything is fixed and Qatar comes back online, then they're back buying from Qatar and not from the U.S. anymore? What does that kind of longer term scenario look like?
Yeah, and I think good to talk about U.S. oil flows. And indeed, expanded U.S. exports are stepping into the market to fill the breach just a tiny bit, because even if you are exporting another 2 million barrels per day, mind you, keep the 14 million barrels per day gap in mind. So it's a trickle. And it's a relevant topic, especially Secretary of State Marco Rubio is in India, I believe this week. And a lot of talk has been going on around his visit that probably the US is going to be looking towards India to buy more of its oil and gas, and rightly so. I mean, the US is producing more, not that much more, but it is on a incline. And the region of incremental marginal demand is going to be Asia, within that China and India. Now, I don't know to what extent the US is going to be successful in pushing more of its energy into China. I don't think anything very substantial came out from the Xi Jinping Donald Trump summit. So I think India is the obvious next place they're going to look to. But 2 points here I'll make, which is not just true for India, but for a lot of the other countries in this region. One is the distance. So freight rates matter a lot, right? So India gets the majority of its crude from the Persian Gulf, 4 days sailing time. It's a very, very short hop. Compare that to several weeks and resultingly much more freight rates that need to be incurred bringing in crude from the US or even, for that matter, anywhere in Latin America. So while India and other countries in this region are diversifying, I think at this point they're being very opportunistic. Also, the crude quality matters, right? So the countries in this region cannot replace most of the crude that comes out of the US's light sweet. What they're looking for is medium and heavy grades to replace like for like what they're not getting out of the Persian Gulf. So I believe any increments that you see in US exports and Asian imports of US are probably going to be very opportunistic. Things will sort of normalize back to pre-war patterns once the Hormuz flows normalize. But again, when that happens is anybody's guess at this point.
And we'll do one more. Curious, since you're talking about sort of where Asia, will be sourcing and some of the difficulties in diversifying out to those further distances. when we're talking about this, earlier we mentioned that there's some headlines about that we're really going to hit a point in June, maybe July. The IE chief was warning about it today, where those inventories, that cushion that you mentioned, starts to run low or run out in some cases, and you're going to really start to feel the crunch. Should we be concerned? What does that look like in Asia, since it seems like some of those countries are the most vulnerable to that gap?
Yeah, so Asia obviously was the hardest hit. 80% of its imports come through the Strait of Hormuz, or used to come at least before the war. This is also the place where a lot of countries, both emerging market economies, Southeast Asia, India, as well as developed OECD members in this part of the world, like Japan, Korea, even China, they all raced to put price caps on pump prices. So it was a combination. In some countries, the government is sharing the burden. In a lot of the countries, simply the national oil companies or the refiners are being made to pick up that slack. So basically they're taking a hit on their margins. Now, what is starting to happen already is that there are clear signals from governments across in this region that this can't go on, because when they did put price caps in place, everybody at that point was expecting. And remember, how many times we heard, oh, this will be all over in 4 to 6 weeks, and they thought, okay, maybe if it's just 4 to 6 weeks, even 2 months, we can do that. Now the realization has set in that long term it's going to be very damaging. They simply can't afford to continue capping the prices. So I think we're going to see demand response starting to emerge in this part of the world as well. We will start seeing a shrink in jet fuel consumption, diesel consumption, and maybe after that gasoline consumption. I think that's when. So you don't necessarily need $150 crude to do that job. I think if, as governments in this part of the world start to pass through even the current prices, just to give you a very quick example, in India, for instance, diesel prices are close to, I would say, equivalent of 90 cents per liter, where they actually need to be for refiners to make no loss, just break even, is $1.90. So you see, that's the amount of increase that will need to be passed through to fuel prices. So you don't need to see crude go to that. Even if the current crude prices are fully passed on into fuel prices, you'll start seeing a demand shrinking in this part of the world. Will that balance off the 14 million barrels per day deficit? Probably not, but it will go some way, I believe, in covering that huge gap and the draw in inventories that we are continuing to see.
Yeah, and that's certainly when it'll start to feel real and have an impact on the global economy. Vandana, so wonderful to have your expertise and insight today. Thank you so much for joining us.
Thank you for having me. It was my pleasure. Thank you.
Tracy, it's like the reality of what you all talk about, and then the markets that seem to sort of shrug it off for the moment. But what final thoughts from you today?
So again, you guys, just beware. Headline risk is out there. We continue to see that every day. I sound like a broken record. Just when you think everything is calm, something seems to come up. So be careful out there today. Anything could happen.
Yeah, we got to get that little banner for Shy. The strait is still closed.
I know, right? The strait is still closed.
All right. Thanks so much. I appreciate it.
Thank you.
Okay. Great conversation. Time for Pharm now and Tape Talk. Good morning, Pharm. Seems like everybody's an oil trader again.
Oh, Lord, it's been fun. I'm kind of, I think the guest, or maybe it was you, was talking about shorter term time frame traders just being annoyed with the news headlines. I mean, it is tough because you want to trade that market, and it is pretty annoying. You just want to trade price, and every few minutes, it seems like they throw out some crazy headline one way or the other, and it's either ripping more than it should or dumping more than it should. But it's been a good trade, but it can be really annoying if you're not working tight stops.
Yeah. So what do you, we saw things swing around this morning a little bit at 6:30. I haven't checked because I've been talking, but what are you looking at for the setup for today? How are you feeling about today?
I think today is actually a really, really important day. And it kind of goes back to Sunday night, and then obviously I was here Monday, I think. We took out last week's low on both ES and NQ, and after framing higher on the weekly, just meaning the weekly is making higher highs and higher lows each week for such a long time, right? However many weeks in a row, it is extremely common to see a back test higher after a prior week's low is taken, right? So had us on watch for some kind of a look, blow, and fail week, which we got, and is still in effect. So we need to keep that in mind. We talked about there's the possibility that we just bullish engulf, in which case I would not consider the weekly time frame to be in balance. But there's also the possibility of sellers defending a back test higher. So we look at where would that back test higher be, and for me, roughly Friday's high works basically. If you look at the ES chart here in the 74.55 spot, that's not Friday's high, but you can see how relevant this 74.55 spot has been, right? It was the top of a 3-day balance off to our left. We got a break of that 3-day balance. We failed back into that 3-day balance. The bottom of that 3-day balance was last week's low. So if you look at this chart, you're like, okay, well, head and shoulders, right? It doesn't matter until you break the neckline, right? From my perspective, we're already looking at that spot back here before there's a head and shoulders, right? Because we've been saying you need to break a multi-day balance to the downside, not just a failed break to the upside. So my point is, we're kind of coming back up into range high with our back test on both ES and NQ. And so I'll flip over to NQ. It's a little bit more clean, but you can see this came basically up to Friday's high. So I mentioned I could have used 69 to 72 as my weekly level up here, 65 maybe. Broadly Friday's high range. We had that RTH gap on ES that remains unfilled. So this is a big spot, right? Looking over at NQ, it did make it just about to the 469 to 487 spot, which I was looking for. So that's a very, very natural area for NQ to back test as well. So the question from here then is, is today constructive and we just rip through this overnight high and we go for a bullish engulfing week on NQ and ES, in which case, if it does engulf, even though we took out last week's low, I'm not going to consider the weekly time frame to be in balance. So I'll see this continued trend. And that's pretty straightforward, right? When Moon, when Lambo. If this back test actually resolves in some kind of downside to end the week, and the weekly candle ends up looking terrible, then it changes things a little bit, right? It'll still be a 3-week balance that could extend to 4 or 5 weeks, but it would at least have intermediate time frames neutralized. So that's why I say today is really, really an important day. I think you can trade your bias, but keep back of mind, and especially on ES. Well, NQ2 really, honestly, we have this nice, beautiful balance profile on ES. Once we failed the top, the bottom can come real fast, right? So I've been taking longs, nothing but longs for this side of the move. So I'm not calling for a collapse. I'm just saying you have to have back of mind that a fail at range high after this back test, you can see the bottom real fast, real fast. Maybe it's a news line facilitates it, but we can come all the way back down and we could be there in 2 hours today. So you just have to keep that back of mind and then watch your spots on a daily time frame, which I'll get to in just a moment, that keep this thing constructive. For NQ, it's similar. It's not quite as clean of a D shape. You could have looked at this and say, okay, well, maybe we're going to leave an LVN here, and this will be some kind of a double distribution here. But broadly, the overnight low and really kind of right around these 150s, 160s, NQ can get in some trouble. Certainly if it loses this 29.069 to 29.090 spot again, are you probably going to have some demand in here left from trap sellers early in the week? Probably. But same thing. This can crack back down pretty fast if some of these key spots are lost. Just to maybe have a cleaner picture on ES, you can see this was the 3-day balance that I had roughly, actually, this would have been the bottom, but you can see this nice kind of consolidation range. So popping through the top of this range and failing has potential to come all the way back down. Just another way to look at the same thing that we saw on a 30-minute chart. So again, let's drill tighter, and we would then look at the shorter time frame levels that could prevent that from occurring. And then where do we start to look and say, okay, well, it's starting to look likely that we're going to come back down. So to me on ES, the big spot to the downside is kind of right around this 22 to 24 spot. Keep in mind, I use levels that provide me with more information than necessarily like a firm support and resistance. So like this 74.15 was prior daily high, and actually we double tapped it, right? So it was Tuesday's high. I want to say it was like an IB low or something from a prior day, or IB high. We had this overnight high stick there. So an obvious support resistance, right, to potentially stick save this 22 to 24 spot, along with some demand from yesterday. The bottom line is, to me, I mean, persistent offers below 22 to 24 now at this point, after clearing out some of yesterday's demand, put this at a little bit of risk. I do think 73.98 to 74.03 could bid again. And potentially stick save this. There's no clarity and strength until you're back above 22 to 24. So, for last night, that was the issue. We got this like strange, bizarre nuke right at the open. And then it was just bought, right? And then you can see what happens once 22 to 24 is reclaimed. We make a run for yesterday's high. And then we get the failed push above 55 to 58. Basically yesterday's high and that 55 spot, we come back down to 22 to 24. So those to me are going to be your key spots for managing bias anyways. So now that, again, first pass down below this 22 to 24, I wasn't looking to be short because there's a lot of demand left from yesterday, but firm offers here, especially after a test of 73.98 to 74.03, your hackles are up. You're saying, okay, we can't get back over 22 to 24 anymore, right? So that's to me what bearish would start to look like. And then, really persistent offers 73.98 to 74.03 is trouble. Again, first pass until sellers take out a prior day low, right? Buyers will show up. So what can happen is we trade through the overnight low, we can crack levels, it gets disgusting, and then there's like some stick save at something like a 73.90 or something like that, right? Buyers come in, sellers gas out, and then it just all bets are off on the short side and things start to rally, right? But again, if you're in a persistent downtrend, the risk is that we then come all the way back down. And this week's low is just not that far away. So clarity and I would say strength above 74.22 to 74.24. Longs are probably fine. It gets a little bit tricky here. I would still watch for a failed push through this overnight low. It's got to reclaim 22 to 24. It doesn't mean you can't front run it, right? If you see a reactive bid come in 73.98 to 74.03, you can run with that. You just get to make sure that this isn't offered from below, and you can be in some trouble. And then NQ, pretty similar picture. So this 114 to 135 spot is really close to this weekly level, which I hate to do, but it had been really reactive from below. And so those pop sellers have become dip buyers, right? At that spot, just a support or resistance support flip, at least initially. But again, we're kind of coming off a fail of a prospective, range high on NQ. Pop yesterday's high, nuked all the way back down. So 210 to 234 is what I'm using for NQ, which is analogous to the 74.22 to 74.24 on ES. And then again, like this spot kind of has to hold. It starts to look pretty bad again. So you can get a failed push through the overnight low, then maybe this 29.069 to 29.090 spot holds, and it can be okay and be constructive. But I don't think you want to see yesterday's low taken, and you don't want to see persistent offers below 29.069 to 26.090 because, again, risk of coming all the way back down. So that's what I'm looking at for today. I'm definitely a lot more cautious. Last few days, it's just been like, I'm going to buy the dip. This should be straightforward, great trades. I believe this is less so today. And this is the opportunity for sellers to come in and really change the tone because, again, you look at the look below and fail week, everybody's thinking, okay, when Moon, win Lambo, it's off to the races. Everything's going to be great. But if this week closes down near the lows, you're going to feel very, very differently, I assure you.
Yeah, end of week has been treacherous if we're going to see that kind of action, certainly. And we're going into what should mention a long holiday weekend. Markets are closed in the US for Memorial Day, so that's probably going to up the ante a little. Quick question coming in. I'm not sure if it was for you or for somebody in the chat, but what kind of volume profile are you using? What volume profile indicator are you using?
Yeah, I personally use a fixed range volume profile. They're like like any of them are fine. You can do a session volume profile and you can set that to a week or for a day or whatever. I use fixed range because I do move them around a bit intraday and intra-week and look at different legs of moves, whatever. I also like kind of how it looks and how some of the settings do. But I like my tick size as low as possible to still generate a volume profile, right? Some of the bigger tickers, even like NQ, sometimes you can't get away with like 1 or 2 ticks. You need to rip that up. But, ticks per row, as granular as possible, as low as possible. I just keep the default 70% on value area. Some people do 68 for the math associated with standard deviations. And then obviously choosing somewhere in the middle, 69 makes a ton of sense to me. But I use the fixed range volume profile, and you've seen me put profiles on like all kinds of stuff, right? Like a monthly, a weekly, a daily, or just like a leg of a move. So tinker around with what works for you, but I do use the fixed range.
Awesome stuff. All right, Pharm, thanks so much. Have a great trading day. And if I don't talk to you, have a great weekend.
Have a great day. Appreciate it.
Okay, the poll, you guys are sort of split across the board today. Tiny bit of an advantage for the bullish sentiment, but a lot of you are feeling kind of neutral or bearish as well. Kind of, I think, echoing a lot of what Pharm just said, who's definitely got a little bit more of a cautious tone today. We had some data in weekly jobless claims, not really a mover, but the Philly Fed index went from 26.7 to negative. So that was a big swing. Another indicator shy throughout there too. So we had a couple of big misses on data. They're not huge pieces of data, but it's just sort of underscoring that. Are we seeing a deterioration under the hood that we need to worry about? We have manufacturing data coming out at 9:45, which could be a market mover. And of course, as Shai warned, as is the case every day, we are once again keeping an eye on headlines around Iran that sort of swung things around this morning around 6:30 and changed the tenor of the day. All right, everybody, let's get to it. Up next, we've got Trade the Open with Chris and Merritt. Hello, gentlemen. I didn't bring my hat today. I should have brought my hat. How's everybody doing?
Damn it. Why didn't you tell her, Merritt?
I know. I didn't get the memo, Merritt. What happened?
Damn it,
My bad. I
Merritt.
dropped the ball. It's on me.
Next time I'll have one. I love the roll tide, dude. I think that you just dropped in there, Merritt, as well. But how are you guys feeling about the day? Chris, Pharm's a little more cautious today. What about you?
Yeah, same. There's a little bit of weakness here. We are in a range, so it feels like we're just ping-ponging back and forth. And maybe this morning weakness here rolls into the open and we pull back into that range support.
Merritt, how about you? What's your mood today? Everyone's frustrated that I talked to is frustrated that they have to keep being an oil trader. They don't want to be.
You don't have to be. There's everyone likes to, I think, erroneously attempt to become an expert on the topic du jour, and that's just never going to stop, right? So I say get off that hamster wheel if you're a technical trader, right? Like, yeah. Feel free to follow things and it be intellectual and understand the world and different things. But yeah, no, I am very neutral. So for me, looking at kind of the main balance area from last week, I'm not sure if you guys can see charts right now or not, but this is where the bulk of the volume was done last week. We took a little peek below a lot of that, kind of one ticked last week's low, drifted back up, and we're still chopping around in where the bulk of trading occurred last week. So there's really no new information. I know that it feels like, okay, things sold off a bit here this morning, but it's really nothing new. We're rotational and balanced within last week's main balance area.
And that's a good set, like recenter us for the day, which is awesome. All right, guys, I'm going to leave you to it. Have a wonderful one. Hope it's profitable.
Take care, Maggie.
Bye.
Thanks. Take care. Have a good one.
What's up, man?
Yo.
How are you?
Good, man. How are you?
Good.
How's your week been?
It's been good. We're entering full on, summertime mode here. About ready to wrap up turkey season and start focusing a little more on golf and the pool.
All right. Sun's out, buns out. Morning chat. How's everybody doing? Oh, yeah. Morning. I'm going to share my plan real quick here.
Do it.
All right, guys. So if you guys remember from yesterday's afternoon stream, I've been focused on longs ever since we came back to that prior week low here in NQ. Had a beautiful fill breakdown there at the same time as, almost every sort of semi-stock, AI stock bounce off to 20 EMA on the daily. My target, I had a long going into the close, was this 460 base resistance, which we did hit in the after hours. We have since then rejected. And the idea here now is, hey, can we sort of hold here? We're attempting to break this like 200, 210 area, but if we can hold here, this London low, can we shoot back up into that 360 to 460, resistance for this range? Then higher, of course, if we form acceptance there. If not, can we come back down to the bull bear zone, which has been this 060 to 100 area, has been a great level to trade away from. Even with yesterday's open, it's just a little bit choppy, but a beautiful fill breakdown that led that move, that push higher. So if we do come back down there, can that hold once again, or are we going to make our way into the bottom of the range that we are in since May 7th, so 2-3 weeks now, to that support again, right? That 700, 750 area. Can we get a reaction similar to what we've seen? If not, we can form acceptance and then move lower. We do have a 3-day weekend coming up, so I don't know if there'll be, but we'll see. With NVIDIA earnings, a lot of the semi stocks are down a bit, so we want to see if that gets bought back up. And then if we can sort of coast and remain in this range into that 3-day weekend, which I think so. For ES, a little bit the same. If we can hold here, bounce back up into 74.40s, prior day high, it's range resistance at 74.60s. If not, it has a big bull bear zone at 73.90s, which is similar to that 0.60 in NQ. If that fails, we see range support. So it's a little bit of a range action here, guys, versus the directional trend that we were in for like 5 weeks. And let's see what we get. Yesterday's rally was based on a lie. Listen, did it go up? Yes. I would say it's your job to participate in that, but you may have different objectives. Who cares if it's a lie or not? Like, who are you doing this for? You're going to go ahead and turn around and tell them, hey, I didn't make money because it's a lie.
Justin, one of my never mind, I'm not going to tell that story. Justin says, Merritt, what is the reason for your long?
Eric.
We are testing the lower edge of yesterday's balance area, finding a little buying coming into the market, and so that's a good trade location for me. It's always iffy with inside of 20 minutes, 22 minutes to the open. Because a lot of times you'll like to get like a little extra flush. It wasn't a fantastic low, but the way the buyers came in right there, it's a good trade location from the edge of yesterday's balance. So to me, that puts I've got this area highlighted on this chart right here. So trading from this end and hopefully working back up to take profit on the other end would be the plan. Rotational trade in a rotational market. Are you talking laser? Are you talking about back adjusting? What you call the merge back setting? Is that back adjustment? If so, it just depends on your strategy and what you're trying to see.
You need your back adjusted?
I defer to Chris on will SpaceX and ChatGPT IPO pull the liquidity from the market in the short term? All caps. I defer to my superior, Chris.
Listen, now I'm no SpaceX expert, but after reading the data on Twitter, I am now an expert in space, all space things related. Okay, I did my research, my due diligence. Why are we starting off today going full macro here, guys? Full conspiracy macro.
Never go full macro.
We're trading inside like 3 hours. What? What macro?
Never go full macro, bro. Unless you're Tracy, of course.
Yeah, why wouldn't you be bullish on anything AI right now? They're the sector leading the market higher. Until that changes, price action's telling you where the money's at.
Hey, where the party at?
Oh, you got a little hood in you? Just a little bit?
I went to a super redneck school in Alabama, as I've said, and we listened. It was either just like hardcore country or hardcore rap. Those were the two genres that were listened to in high school.
Now, let's see what happens here. I don't like this choppy structure. It might be a slow open for me. And so either we come back and test that 0.60 level, or we hold here and bounce, but it's looking like it wants to dip. Semi's down a little bit. How much is NVIDIA down? Oh, NVIDIA's down $2.
Yeah,
it's down so much.
No.
Oh, Rocket Lab. Darn it. Intel down a bit. AMD. Okay, not bad. Not bad.
What's your question, Laser? I answered something from you earlier. What you talking about? I asked you in particular. I said, "What's a merge back?" I said, "Is that a back adjustment?" So you answer me. What is it? RTOTA.
How do you get a question answered here? Well, you got to ask it first, my friend. You have an Alabama brother.
I saw that. I gave him a very special acronym that he LOL'd.
Oh, is that your gang sign?
If you know,
What
you know.
the hell? Listen, we don't need any of that, okay? I left that life for a reason. Don't bring me back. Okay? Don't.
Morning, Robin. Let's see a little flush here into the open, 15 minutes. A little flush and a snapback would be a good scenario for me to re-enter long.
All right. Oh, totally. KTS. Yeah, let's get those likes up, guys. Por favor.
I'll put a little tweet out. Forgot to do that this morning. Let people know we're not, we're going up on a Thursday. Jimmy Cags. Gold futures breaking down.
BC getting no love. Yeah.
I think the hat's not as pink as you guys think it is. It's like a faded, brushed coral. It's look, guys, this is not what it looks like.
It's okay.
This is not what it looks like, man.
It's okay, salmon boy.
It's salmon. They call me Salmon Black.
Hey, Luis, I just shared my NQ plan little bit ago. Maybe
this was Crimson 20 years
20 minutes ago.
Thank you, Jim.
I'm gonna
Drunkles.
rewind, but pretty much we're in a range. 060 to 100 is the bull bear zone. It's a little bit weak right now, so I'm wondering if we are going to come down here. I am interested in engaging there. That's been a great area to trade away from. So if we do come down here, I'll look to engage in an opportunity here. If we hold here and we start climbing back up, then I will continue to look for higher prices back again into that range resistance. But for now, I'm just going to be patient here. I was bullish and I flipped long at the prior week low, and going to see now what happens here.
Yeah, bonds put in such a good balance area during April, and then we broke that down, and it's just been
Oh man, yeah,
in bear mode since.
beautiful breakdown though.
Mm-hmm. Mm-hmm.
Bonds can't get a bid since, like, remember when they used to be like hot back in the day? 2019.
I mean, once they started, I think back to like 08, 09, when we started, QE and all that. I mean, that
Yeah.
was something. All right, chat. Is the ES going to put in another mushy low? No one knows. What if I pull out the old scale in approach? What if I did it? What if I did it?
What if you were better?
What if I was better? What if I could just get good?
What if? Be better. Corn looks like it could get a pop today. I don't even know what the ticker for corn is.
ZC.
I put Z and I get Zillow.
At ZC. Backslash ZC.
ZC. Oh. That it was just one Z.
There's a micro corn. I did not know that.
Oh, corn can move.
Corn can move. So
Wow.
can that Koj.
Seen this the Korean market though? I think it was a fire recently. Look at that thing.
What's the index name for Korean stocks?
KOSPY.
Oh, the Kospi. I've heard of that before.
Dude, ever since
Heard that
last
term,
year,
but I would not have got that in a trivia question.
200% in less than a year. No, I would
To me,
say
it's
a
like,
year.
yeah, I used to live in New York for a while. I used to see people when they did that big Kospi once a year. There's a bunch of people like dressed like Spider-Man on the subway and stuff. The Kospi. Note to self, this is not good, clean rotations and momentum.
In
Mr.
what?
Black, or Mr. Pink, as I guess I am today.
Oh, is that what somebody telling you?
No, that's me talking out loud.
Oh, but are you talking about the
I'm
indices or
noting the
what?
short-term conditions. I'm noting that, I've already dipped the toe in the long, and a lot of times I tend to, once I get started on an idea, I keep just
Yeah.
pestering the market. And I'm just kind of going ahead and reminding myself right here that these are not good rotations. So I need to not get overly aggressive at this trade location.
Yep. It is AGS. What does that AGS stand for? Is that a futures contract?
Athletic Greens.
I don't see a futures contract.
Reading acceptance radioactive is not using 50% of a rotation is good, but it's only one rule of thumb for reading acceptance amongst many. But yeah, it's a great place to start. How about them cowgirls? Ain't they something?
And it's gonna either we get one of those unexpected rips off the open, or we drop. The structure here is not healthy.
Good morning, bros. The old drop and pop. That's what I'm thinking. Mr. Pink, when would a trader take a break and trade sim for a day or two? When would I tell a trader to take a break and trade sim for a day or two? Either if they're in a drawdown and they have reached a point where, based on me observing their work, not necessarily their trade fills, but their work as in journaling, review work, and I can just tell that they are in a bad space mentally, I will suggest first, probably not us going and trading sim. First, probably, hey, go do something fun. Let's detach a little bit here. Go take a day, 2 days, a week if it's very, very severe, and don't look at charts. Don't think about markets. So that's a possibility is during a drawdown when the trader is very, very emotionally not in the best place mentally. Another one would be risk violations. I will put traders on the demo as a punishment for risk violations from time to time. If they know better, and they might get a pass here and there on something. We have a very strict risk culture at Apteros because what else matters more than that? We have what we call a trader first risk culture, which is that you are responsible for your risk. Don't just say, I'll just get auto liquidated, whatever. Let me do this or that. I don't care. No, it's you controlling your position sizes, controlling how much you're risking per trade, controlling how much you're risking per session, all these things. And if traders are making known mistakes and they're doing it blatantly, I'll punish them by putting them on the demo.
Yeah, punish them.
Punish them. Punish him. Get over here. What if they go berserk or emotion takes over and they yell or lash out. Well, I mean, that happens. You know, people get upset when they're sucking, and I'm letting them know sometimes. What happens? We just talk it out. I have to wear a hat in my seat where my favorite analogy is I've got a bullpen of really good Major League Baseball pitchers, and one of them's on the mound, and sometimes I got to call timeout and I got to walk out there and I got to pull one off the mound. And guess what baseball players do sometimes? Spike the ball down or get mad or, whatever. But guess what? It's that manager has to make those tough calls and sometimes knowingly create a little clash with personalities or something in the heat of the battle. It's fine. It's fine. All right. Almost to the open here.
See if we can
Let's
hold.
lock in.
Lock it in.
You lock it in.
All right, we're seeing that little divergent tape here. That NQ is getting a little bit of a pop. Let's see if NVIDIA gets bought. Oh, what happened here? Okay.
Still mushy, still choppy here. Very quiet open.
NVIDIA weak, but other names are kind of bouncing. Yes, much weaker.
Yeah, so far sellers kind of dominating since the open.
Yeah, cyclical is a bit weak. NQ's holding. NVIDIA is trying to go green now. little bit of a mixed tape. Okay. Just wow, yes, just won't. Divergent tape here, guys. Let's see which one wins.
Yeah, I'm looking at the highs that, the swing high from where we had a couple of red dots here from 630, 640 Central. To me, this is one just nasty, grindy rotation down. So just one swing.
NQ's pushing out. Looks like we're holding so far for NQ. What's leading? Oh, Mags, Google, Microsoft, Apple, NVIDIA is the strong. NVIDIA is green now. Yeah, so far setting up a failed breakdown both ES and NQ. Okay, so if we are going to hold in, I have more confirmation for now. We're still in a range though, so can't get too bullish. But if we're not coming down into this 060s area here in NQ, which is the bull bear zone, then we can chop around, hold here, do a better job at reclaiming this 220s area. Then I'll look to see if I can engage in a long, or else we chop around and then I wait for a drop into the 060s area. Yes, remains weak. So far, choppy.
Yeah, an attempted momentum shift by bulls off of that grindy swing down. I would call that swing now an actual swing low. Not looking very strong on the tape side of things. I think there's still more pain to be inflicted on bulls for the time being. I'm looking for a further flush.
Finish them.
Finish him.
Uh, ooh, ARM is new highs. Can I let you know when I enter a trade? Yeah, you'll see me get more active. You'll see me share that, hey, I'm
Your
looking to
little
engage
position
here.
tracker is cut off on that window. I think you can only see like the very right corner of it.
Don't ever cut me off. First of all,
Now you put it behind your name. Oh yeah, mine's kind of like that too, isn't it?
can I make this bigger? No.
How's that? There we go.
Shut up. Shut your mouth. Shut your mouth.
Shut your mouth when you're talking to me. There's the flush. Push him, push him, push him. Push, push, push.
Yeah, choppity chop for now, guys. Take it easy. ES is weak, weak, weak. What is bringing it down?
Take it easy.
RTY is down a bit. Banks are down. Industrials are moving lower.
All right, they got close to inflicting the max pain there.
PLTR. Why am I getting an alarm? Semis are lifting up NQ here. They're trying to.
Yeah, I like this low a lot more than the last one. The old drop and pop. For me, I'm going to need to see something start to accept back inside the main balance from, I could be aggressive here, but again, it's not good price action. Still very choppy, a lot of bar to bar overlaps. So I'm going to need to see something start to hold above 23 to reinitiate the long thesis off the lower edge of yesterday.
Nvidia's coming back down now. Yeah, it's just choppy, choppy.
Choppy, choppy, too boppy.
Why does it end so fast? Semis are the strongest sector at the moment, of course. They're trying to lift the market up. If we can hold here, we're starting to get a little contraction here. So I'm interested in trading the break of this. Nice little structure here. Yeah, not much going on here.
Chris, what's your favorite trading or markets related quote of all time?
Of all time?
Mm-hmm.
Gosh. I don't know. I don't really remember many of them right now.
Trade the boxes. Maybe choppy choppy to boppy.
It's Call Me Poppy?
It's a front runner for sure.
Trade what you see, not what you think is good. Yeah. I Googled stock market quotes and it gives me literally like quotes of prices of stocks. Hmm. Yeah, I don't know. What would you say is yours?
I mean, it's a tough question, but I think I'm gonna go with is it Ed Sakota? Everyone gets exactly what they want from the markets. I think that's like the deepest thing that's ever been said about trading.
That is true. Oh, that's my quote. Well, thanks. I appreciate it.
I'm rubbing off on you.
Yeah, it's you have to choose one of those pains. We're wedging up here. I'm interested in some action here.
No, guys in the chat, I do not think it was deserve. That would not be a good quote. It's everyone gets exactly what they want from the markets. What does that mean? It means that if you want to be excited or entertained, then that's what you'll get, right? If you want for some sick reason to be punished and whatever, then that's what you'll get. Yeah, this is very trash. So again, I think that the sellers have inflicted the pain that they could, and I think that we now have a second potential swing low. So the first one I was kind of looking at was here. Thought that was enough for a swing low, and now this will take me 37 minutes. Oh my goodness. Sellers pushing right back. We'll see. Not a trade.
I tried a long, but I took it off minus 0.5 R. I'm still watching. I'm looking to engage away from this little range. The Qs are in a little box wedge square here after a gap down. So I'm looking to engage in the break away from that.
crimson. We do have that weekly VWAP at like 07, just kind of looming right below this area. A lot of times, if you can't make the longs kind of puke and capitulate, you end up with this type of maybe that got him, maybe that got him, maybe that got him, just kind of a nastiness. The thing that you're seeing from both Chris and myself here today, though, is we're not getting chopped up in this crap. And I hope you guys following along at home are not as well. Remember that reminder I gave myself just before the open? Hey, man, this is not great action. I know you took a long here and you tend to kind of focus on re-entries and start trading a bunch of little momentum shifts. Let's not do that. It's not the right time or place for that. An R saved is an R earned.
Video week here. Where are we in relation to?
Up, down, 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 up, down, kind of up, kind of down, 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 down. Correlation's still there between gold and S&P. And inverse with crude. I will say this current market cycle, if you will, has been a little bit annoying in terms of the correlations. It really has been, right? You don't have gold that's really independently moving. It's moving the same as indices. You don't have crude oil that's independently moving to those. It's moving inversely. It's not exactly the same, but look at this. S&P, up, down, up.
No, Robin.
And then a grind down. Up, down, up, grind down, right?
Did I just miss it?
Down, up, kind of down, but not down, grind up, inverse. That's a bunch of buying coming in off the tape.
Still a bit choppy, but we are holding where we needed to.
It's a change in character.
Yeah, the 15-minute wants to push out.
Changing the speed of the tape.
ES is so much stronger now. What happened? I think we're going to start to see some rotation into cyclicals. Oh, yeah, big turnaround in cyclicals here. No, come back, fill me. Really? Really, really? If this pull back into the 2-minute 9MA here holds higher high, higher low into the 9MA, I'll look to engage with the stop under that higher low. I'm interested in cyclicals though. Banks looks like they're ready to break out here. Come on. All right, well, I didn't get filled on that. I'm gonna have to wait here.
No, I do not use a dome. The only time I use a dome is if I'm trading in a market where I'm concerned about liquidity and I need to know what size is there for the size that I'm trading. Let's change our color.
All right, so we held, guys, where we needed to. We didn't break lower. I wanted to engage in here, but after I tried it once, I said, I'm going to wait. So I'm still waiting to see if we can pull back, create a higher low, and then engage if we are to see follow through. And then if nothing happens, I'll just wait for my IB trade and take that. Like it might still be choppy here with NQ. ES doing better job. It's much stronger. So this is what we'll know if we are going to push out or not. We are retracing now to create the first higher low after this little wedge pop breakout. If we can hold the 9MA, right? See what I said? MA. We can hold the 9MA here in this black moving average. Then we create a higher low and we can push out higher. If the 9MA here fails, then we get a little, oh, look at that reaction from it. We traverse to the other side. So let's see. I'll look to engage here and We're stuck in a little range. Back a little bit. Get a
Not enough of a pullback for me.
All right, so we pulled back. We had the higher low hold, and now we're breaking. We're trying to. So it's worth a shot here for me to put my stop under this higher low and see if we continue higher. If we don't, then it'll just mean more chop.
Mark, you've never seen more volatility than this in 30 years? I hate to say it, but you must have been asleep during a few periods. This is extremely tame. We've rotated up 30 handles from the low. I remember sometime during 2020 where we were moving, what was it? 100 handles up, 100 handles down, like
Oh yeah, those days
right off the open within 30 seconds, like both ways. But yeah, I mean, volatility's up. You know, you're not wrong. I'm not trying to totally beat you up here, but there's been a lot more volatility than this over the past 30 years. Yeah, nice entry, Chris. It just was not, you know, it's my main scenario, right? Get back above 23, get a pullback, get long, get in there. Not enough. I'm very strict most times on my rhythm, like how much of a pullback I require to get involved, and it didn't meet my parameters. I'm glad you got a piece here.
it's still questionable, but maybe the keys go to close the gap here that we put in.
We are kind of pushing into this other side of developing value in the session. Right chair. Nice rotation. It's good to see the market open up a bit here. Good to see some good rotations.
We're not really seeing the strength push out into that next target here at 360s. For NQ, ES is taking more of that love. Yeah, I gotta buy some banks. These things are ready to explode. Goldman Sachs, new all-time highs. Morgan Stanley.
Potential swing high here.
Yeah, it doesn't look like we will hold. What do I do here? I closed it at break even. I do not like that we can remain range bound. Do I think banks are strong because of their positions in SpaceX? If I were to look at it like that, I would say the focus should be in GS, like Goldman Sachs. Yeah, that's why they're at all-time highs. GS and MS are leading that IPO. Yeah, no follow through. We should have pushed out, but we're dancing around these pre-market range highs here. And my idea was like, okay, if they fell back down below that, then we can easily come back down and remain range bound, since a lot of stocks are just chopping around. So I might just wait for the IB trade here with you guys. The target is still 380s. That's if we can hold here, the market should move into that area. But with 20 minutes before the IB closes, my IB trade may set up here shortly if once this uptrend attempt here ends and then we get a little pullback and then the reversal from that, I would love to take that.
For the record, for the chat, I did take a long right here. No, right here. And that was part of my plan as I've stepped through. And then, I was looking for the flush into the open and perhaps a nice reversal back up through this area and get involved. We started to spend so much time and it was so choppy down, starting to hold below here. I turned this level red. So I'm bearish below it, not actively stalking any trade because there's no confluence across multiple time frames. However, where we're trading relative to yesterday's main balance was bearish. Once we popped back above here, you saw me change this to green. I started talking about how I was talking about how we were putting in lows, how I thought the sellers at this point had exhausted or inflicted max pain upon longs. That was the commentary. Then once we see buyers stepping in and we then get back above that level, I changed this from red to green. At this moment here, I was looking for more of a pullback. This is not enough of a rotation for me to get involved as a standard practice for my process. So I needed more of a rotation down, and then I would have been all over the long, which would have been a simple re-entry from where I was long just after 8 a.m. over here. Does that help?
Yes. I'm sorry. Like you're yelling at me. How long does the IB stay a valid area? All day, I would say. You can use, like yesterday we pulled back to the IB high in NQ and we had a beautiful reversal from there, right? So, and that was later in the day, many hours after. So it's great for additional context, idea, trade location. Sometimes later in the day, we have a SMT or a divergence between ES and NQ at IB highs or IB lows. That can be an opportunity. So ES hit the 774.43 zone here that I have marked. Struggling up here at the moment. NQ didn't even have the strength to push up into that 380, 370s, 380 zone. But if we can hold up here, I don't see why I can't push out based on the strength in semiconductors and AI. All right, so it looks like we're going to fail here and start a potential retracement. No follow through. So it'll allow for the IB strat to set up here. Okay, so I'll just get ready for the IB strat since it's going to stay choppy. No need to risk.
Squirrely. Getting a little squirrely.
No, what's going on here? All right, so we started a downtrend below the 20 MA here on the 2-minute. Let's see if we can hold the IB low, or if we go down to make a new low. So glad I took my trade off at break even.
I told you where to scale out. I tried to be really subtle about it.
Oh yeah,
Do you remember that moment?
yeah, but
I know it's not his process, guys. He's a trader's trader. He's the man. He can't be swayed by me. Little on his shoulder. Hey man, good spot to scale out here. He's stronger than that.
oh, I gotta listen to Merritt. Oh no, what do I do?
And now I'm dead. Idiot.
Chris, what's the IB strap parameters, or is that top secret? I've shared, a couple of the parameters. Have not shared all of them. I've shared it all with the group I have, and we're all trading it together. But you know what? Next Wednesday, I am having a Develop Your Edge segment at the close for 1 hour here on NinjaTrader, where I will be going through the cycle from idea generation to back testing, iteration through that back testing, forward testing, aligning strategy parameters with prop requirements that I did personally, right, to pass the accounts and get payouts. Because the IB strat, I created it literally for that, and walking you through that whole cycle of idea generation all the way to payout. It's going to be like a broad overview, right? I'm not going to get into the details. That's your homework, but I'll share a little bit on the parameters of the IB strat, but I'll give you. I'm going to be focusing on a different sort of strategy that I've sort of identified with the IB, and help you guys give you a glimpse out to what I did to create the strategy and what you can do as well.
Opening the kimono.
Nvidia's dropping. Yeah, we're just going a little bit of back and forth action here. Oh yeah, Nvidia is dropping now. Yeah, it's a mixed market. Banks are strong though. Industrials strong. ROCAN, it is next Wednesday, the 27th at 4 p.m. Eastern. Yeah, it looks like we're just getting rotation here, guys. That's what typically when we get a chop like this, it's rotation. And tech is moving down. Cyclical sectors like industrials, defense, they're going up, or at least they're stronger than tech. Looks like we're going to make a new low here before the IB closes. Yeah.
Not great lows on the session. It appears that they could get ran here. The lower edge of the weekly balance for me is 74.02. Again, we got weekly VWAP now at 74.08. Couple little things looming. But if we're going to end up with mushy lows, you can stalk Momo shift entry longs in this region.
We knew it was choppy already, guys, right? So we knew the conditions were not there.
We said pre-market.
Yeah. We failed to hold overnight highs on the initial push. That's, that to me is like a clear way. If you fail to hold those highs, then you go back down to what? To the range, the chop that we were in. Now sellers are really in control here. What are you laughing at about over there?
Cooper. Oh man, he just threw one out there that I'm ashamed to admit, Coop, I forgot about that. Let's get Pharm in here. The pod shops. It was just like the last night down in Miami, kind of me, Coop, and Pharm were up at the bar, and we were. It was like just a running joke amongst the group there, the pod shops. You had to have been there. Then we lit up a few cigars, took a stroll through the vibrant Miami night festival. What would you call that? A night, not a festival.
I don't know. There's many festivals that night. I don't know what you mean. You're saying a festival at night? The night festival? Which one? Which night? They're all at night.
Just forget I said anything. I'm sorry. Sorry.
Right, guys?
Festival. Festivus. I got a lot of problems with you people. But this is a no-touch long entry. For me, my goodness. You don't just come back down to these lows and not run the stops and then turn away from it. And it's just, I don't care if it leaves me in the dust. That's not an entry that I am personally interested in. And if that becomes something of some weird new normal in the S&P, which I'm taking notes on it, I'm aware of the number of occurrences in which that is happening, I'll change my tune. But I think as a trader, you have to be slow to chase what worked last time. You cannot just, it worked on last trade, so now I'm going to change my process and my entry tactics and what I'm looking for. You can't do that. You'll always be spinning your wheels and just not getting anywhere and not having any consistency in what you're doing. So you got to be slow to evolve as a trader. There's a fine line. What kind of drawdowns do you experience? How does the performance start to change? Tracking it by setup.
all the kind of stuff. So, do I feel FOMO right now? Yeah. Do I want to be long? Yeah. Am I gonna be? No. I
don't
think
believe
the
that.
win
I don't
percent's
believe
too
that you
low.
have FOMO.
Do what?
I don't believe that you have FOMO. You still view this as a tape that's not really, or is this
No, I
specific
think this
area?
market wants to run up to mid 74.50s. I do. And this is like my main scenario on the day is to be buying from this region. I'm still calling acceptance above the level, even though we're trading below it. So the setup is still on. So I'm making something of an advanced discretionary pass on it that is not easy to sit with. I do feel that FOMO for sure. I really do. Right, 2020. Yeah, I think that's a good clarifying point. FOMO of not being in the thesis that I have for the session, not FOMO of wanting to buy here. That's exactly how I feel. Gilil says, I suck so bad on the short side. Everyone gets exactly what they want from the markets. Do you want to suck on the short side? Maya, I keep one. I don't use one market to tell me what I think about another market. I don't do that. So I don't care if NQ took a low or not. The S&P low looks like crap. Sorry, Gilil. I am trying to help. I'm trying to ask that question though that prompts you to think deeper about it. What does a crap low mean? That's a good question. That's a really good question. My market framework, right? My market worldview is built around something called auction market theory. You can go look it up, study it, whatever. If I ran this will be the takeaway for the day here from me, guys. If I ran a car dealership and I was selling Toyota Tacomas for $40,000, and every time I raise the price up, let's pretend that this area, these lows, is kind of $40,000. Every time I raise the price up to $50,000, something happens with that auction process. Buyers and sellers offering a price to sell, bidding a price to buy.
something happens every time I raise the price on the dealership lot. People quit buying them. The volume dries up, right? Look at today's volume profile, my friends. See that right here on the left side if you see the full chart. It cuts off buying every time we go higher. Whenever and again, I'm selling Toyota Tacomas. Stay with me. Stop thinking about markets momentarily. Suspend that. I'm selling Toyota Tacomas. Every time I raise the price, people stop buying them. So what do? I have to lower the price back down. If there's a ton of volume that is and trade that's being facilitated at an area, it is not likely that that's going to be the extreme of the price movement. Think about the flip side. If every time I raise the price up to 50,000 on these trucks, there's a ton of volume being done. Chat, answer. What am I going to do in my shoes? I'm running the car lot. I'm selling Toyota Tacomas. Every time I raise the price to 50,000, there's a ton of them being bought and therefore sold by me. It's one transaction. What am I going to do? Drink a beer? Wrong answer. Risk management? Wrong answer. I'm going to raise it. That's right, guys. That's right. I'm going to raise the price because most likely I'll be able to get away with it. If there's a ton of transactions being done at 50, you can bet your butt that I'm going to be able to sell some at 51, 52, 53, and the market's going to find that point at which all of a sudden 55K, 60K, what happens? Buyers dry up. Markets auction higher. They advertise prices higher in order to shut off buying and to find sellers. If I can sell one at 60K, boom, done. No questions. I'm going to sell it as quickly as I can. And what's that going to do? I'm not assuming anything. This is the way any art or car or any market that exists in the world with humans, this is how it works. It's not really that deep. It's how it works. So, what does a crappy low look like? It's crappy because it's likely, anything can happen in markets, but it's likely not the ultimate low if there's a bunch of volume being done every time and we continue to revisit a price, whether it's on the high end or the low end. If you continue to trade back there, it's a place where trade's being facilitated and it's likely to not end up being an extreme. And that is, you cannot deny that. So that's my market worldview, so to speak. And so everything that I do trading-wise, whether it's with a certain indicator or how I put different time frames together or whatever, it's kind of built around those views that's kind of my truth of how markets operate and whatnot. There's different views out there, and you can adopt one and you can build your systems around that. But one of the things that Dr. Brett Steenbarger says that's quite possibly the most important thing a trader can do is to develop I think this is his term. I didn't come up with the term market worldview. I think I first read it in some of his work and whatnot. So come up with a market worldview and then build things around those truths that you find. Someone asked earlier, why not short? It's not part of my plan for today. I'm looking at, I have structural areas from other time frames, not from this poor low right here. That's a minor feature. It's not my main strategy. It's a minor feature within the scope of my top-down multi-time frame analysis. So a bearish intraday feature has me not taking longs, which is a part of my overall plan to be long from this region. I hope that makes sense. Yes, same thing.
Here's my... All right, so I'm gonna the IB's closed, guys. I'm gonna be looking to engage in the IB setup, but no triggers here yet.
Six trading, it's a good question. Merritt, I know you play the edges. Why do you not trade the middle to the edges? I do sometimes. It depends on where we'd come from. It depends on if I have multiple time frames that are providing kind of a tailwind or confluence in kind of directional bias. If there's a directional bias versus very neutral markets that are not really offering bias and they're just in the middle after key sequence of events and things like that. So I won't tell you exactly how I do it and everything, but I will trade from some middles as we're if the multiple time frame picture is strong enough. I absolutely will. Would I have preferred to already be in from the edge? You betcha, right? But sometimes that's not possible. Whether it's because you're asleep or whether it's because there was some dissonance in an area from one of the edges or whatnot. Higher. Oh, sorry. I thought he was asking me. They're asking you, do you get long from the IB mid?
Me? Do I get long off the IB mid? Did I take long? No. What is Merritt talking about? He's talking about his own, I don't know, internal challenges.
What?
I don't know. I was trying to come up with something funny, and that's all I could come up with. I have so much. I'm trying to focus on trading here, and I don't know. Sometimes I just say things, guys. Yeah, so I'm focusing on a bullish setup for the IB today. You know, I have shared we are below the trend filter that I focus on, but there is a current rule that is being sort of modified at the moment to reflect or to allow the environment that we are in to take a to have a more of a supportive feature in the setups that I take, because typically, since we are below the bearish filter, trend filter, the idea is to take shorts. However, have found that in a type of environment like we are in today, it still, longs are still being rewarded even if we are below that trend filter. So I'm modifying that, and I'm back testing that rule change, but I'm also testing that in real time with my money. Do not suggest it, right? Do not suggest to go against the rules, but I have experience and I'm willing to make that change for now. Plus, on the month, I'm still up, 22% on the personal account. These Lucid accounts are up quite a bit. So let's see if we can set up, get a trade set up here. Once this bounce is over, I'm looking for a little retracement and then to get long off that retracement.
So 2020, if the risk question was for me earlier, then no, trading from the middle, once you leave those edges, once you leave, like Crudele talks about, trying to get that trade location as close to where the stop should be as possible. What are we talking about, right? Trying to trade from the edges instead of when it leaves the edge and gets to the middle. We're talking about the same thing. It's risk reward asymmetry, and it's trade location matters, and so the further away that you get from the point of the idea being invalidated, the worse the smaller you have to trade the position, the more random wiggle room that you have to contend with, all that kind of stuff. I'm Lock. Merritt, did you get rid of the TPO charts, or do you find the volume profile charts useful in the same way? Yeah, I've always said they're 90% interchangeable. I think TPO does a really good job of simplifying information. I think that volume profile shows a more granular picture. But 9 days out of 10, they're going to pretty much show you the same thing.
I don't know. I'm sorry to hear that, Jaman or Jamin. Just continue focusing on learning from the market. Okay, so
I
pretty much what
bet
I'm looking for.
if you ask yourself, if you on a day, this, and then you might need to create some space away from it, take a break, come back. But like, if you blow up accounts and you ask yourself, what did I want from the market during that sequence? You'll find that it wasn't, I just wanted to trade well and trade my process and follow the risk plan, right? You have to want, any motivation for making any trade decision has to come from a place of, I simply want to trade well. I want to trade well. And myself included, I'm talking to myself here as well. Whenever I find myself taking a trade or taking a scale out or moving a stop or any trade decision possible that's motivated by something other than trading well, after having defined what trading well means for me, right? That's what a lot of traders never get to. They don't define what trading well means. And so, you're just wasting your time anyways. Very, very important. And it ties in with that Ed Secoda quote. Why is the market leaving too many lows? Why is it leaving these poor lows? Asked FBG's 9. Because it can't find aggressive enough buyers. It can't find a situation where the inventory is too short, where shorts get squeezed. It can't find a situation where there's enough aggressive buyers. So it continues to drift back to the kind of the most traded price on the session, which is currently down near the lows.
Chop, more chop. Choppity chop. What does Pac say? Chop, chop.
Choppy, choppy, chubappy.
Chop. Stop calling me Poppy.
Choppy, choppy, call me Poppy.
Choppy, choppy, tubappy.
It took me 5 years to be profitable, Rel. Now, from there to go and learn how to create strategies for swing trading, for longer term trading, day trading, different day trading strategies. It took longer. No setup here. Nothing going on here for my IB strat. So there's nothing I can do to engage here. I need a specific structure, and it's not happening here. So at the moment, there's nothing to do here. I did not. You're talking about what strategy of hers? Yeah, Linda. But I pretty much read. I did do a 4-month program, like systematic program with a fund, and I learned how to create systematic strategies on top of reading, books from Dr. Van Tharp. Just chop here, guys. Nothing to do. I mean, this is a scalper's market. Is there a time component for the IB strat other than waiting for the IB to close? Yes and no. Like if it's the last 30 minutes of the day, I probably won't look to engage because I'm looking for a big expansion move away from my entry. That's going to happen in the last 30 minutes. Other than that, no. It's whenever the setup then triggers after the IB closes, because that provides the levels I'm looking at and the structure that I need to wait for once the IB closes. So it does take very little time to execute, but it's waiting for that to sort of happen too. That's what, can take a while. But you can just put alarms at that point and just step away. I mean, we couldn't even come down to that, 060, 100 area that I like. That's the bull bear zone of the overall range that we're in. Same with ES at 7393. Where do we come down to? Yeah, it does look like it wants to break down here. Might get a breakdown here and go to IB low. When I buy stocks, do you use the same approach, or do you do more like momentum breakout type of trades? I was a big breakout trader, but I don't know if you've noticed, I don't know if you swing trade, breakouts have in the last sort of year have failed more. And what has worked is undercuts of moving averages, failed breakdowns at like prior day low, prior week low. So that's been what I've adapted to. I am getting long. For example, on Tuesday, right, the market looked very bearish and we were pulling back aggressively. And then we started to bounce, right? Midday, I was buying those lows in semiconductors. We were taking out prior day low and bouncing off the 20 EMA. So that's what I was focusing on. But it's breakouts worked from 2017, 2016 to 2022, I would say. They still worked after that when we bounced away from that 22 and 2 low where semiconductors and Max were leading the breakout higher, but they're not really having those breakout structures. Merritt's probably watching golf. Let's be honest, guys. He's locked into the golf game, whatever golf game is on.
No, I'm locked in. I just know there's nothing for me to do here. So I'm actually focused on other traders right now, right? Not on my own work.
All right, the IB strat can trigger here if we bounce above last candle's high. I will look to engage. Okay. The stop will be at 165. I'll put it there for now. I'll put my stop at 165. Okay, so from here, I am now in. Either I get stopped out or it goes to my targets. 2R is at 306.
Love the timing of this here. Obviously, the lows are a concern, but really nice timing on the entry here.
We'll see if it works.
Yep.
I don't, that's what I tell everybody. It's a trend following strategy. I need a big expansion daily move. The day's choppy. I already think we're going to take a stop. And this is where a trend following strategy underperforms, guys, and has a drawdown, which is normal, right? Just because it has a series of losses, it doesn't mean I need to overtrade or get emotional. Like if you truly understand the strategy you're trading, then you are okay with the outcome. You are okay with the losses. Like my wins for the month, I'll tell you guys this, the average monthly return was around 22-25%. I made that in like 7 days this month. So you can imagine that the profitable trades were, distribution between that on a monthly basis. I had already, I'm over allocated to winning trades. I need to take losers. I should expect a string of losses to take place now. I can't, get so confident saying, oh man, I'm up 22%. Let's see if I can make 50%. And that's where you sort of lose touch with what the market may be telling you, and you oversize some things and you press where you shouldn't press. And we can see it, right? How did the market change? We were in a directional one trend higher. We're now in a range bound market. So you just have to understand the equity curve that it can generate, and then just go with it. Be okay with the losses. Like I took two losers in a row the other day, and I was down $2,300. But I was up 8,000 for the month, and I'm still up. So that's just my little comments here to you guys. Chris already made the annual return on the Qs within a week. But guys, it's an aggressive strategy. The percent I risk per trade is a lot. How is the MA different from the EMA? A simple moving average hugs price action tighter, like it hugs it closer. EMA, EMA hugs price closer. The SMA does not. I don't look at the EMA for the 9 period because the structure that I follow of higher highs, higher lows respects the simple moving average better than the EMA. All right, so it's either targets get hit, guys, or I take a stop. And it is what it is. We move on and do it again. I blocked that guy. Too much ego.
A good takeaway for you guys today is having some, I don't care what it is, you need to do what I do or whatever, but having some form of context to where when you come into a session, you can see, okay, if nothing changes compared to what has been, then the opportunity for chop and sideways behavior, the opportunity for more of the same, is very much in play and very much kind of what is until proven otherwise. And I think I just see so many times where traders lose too much in those situations. If you've got to trade, you've got to trade. That's fine, and if you understand that context and it's still worth it, then fine. But I just see a lot of people who get chopped up too much in these type of situations. And I think Chris and I's trading here today has been a good example for you guys of how to handle this type of a market.
What's up, guys?
Good morning.
Hey,
Hello.
morning.
Yo, what's up, gang?
How are
How you
you?
doing?
How you doing?
How you doing? I'm doing good.
How you doing?
This low sucks, huh?
Yep.
It's a poor one.
Garbage.
I don't know what that means, but I'll roll with it.
Don't worry
I wanna
about
be cool.
it. Just realize it sucks. Just realize that every seller in the world has failed miserably today.
Yep. But then, at the same time, every time we drift higher, it's like the buyers are really failing, right? Like nobody's got anything here. Nobody's got any ammunition.
Zero follow through on anything.
Mm-hmm.
It's, frustrating to say the least.
Maybe?
You still short?
I'm not still. I took one. Listen, I don't trust these bears as far as I could throw them. Number one. I took one shot at it. I got one off, had a couple ads, and then I just said, this sucks. I'm going to wait for the other side of value. I'm watching this 74.30 spot, so I just tried it again.
And I'm also watching 230, 240-ish on NQ. But as we get into 11 o'clock, it looks like, I don't know if this 28 guy doesn't back me up.
Yeah, I'm about to get
It's
stopped out of my shorts.
Yeah.
Yeah, VWAP holding.
I
hate a VWAP trade location.
Yeah.
I take them sometimes. I always hate it.
Yep. Especially when it's flat like that. You're just like,
Right.
ugh. Every human and robot on the planet is right here with me trying to do something.
But, I mean, this would be the third rejection from VWAP from below today. I know we had the excursion there after the open, but everything else, there's been a lot of retest of it. So there's a sell program working that. So Godspeed.
Thank you.
Can this be the first sell program that works this week? Can I get one sell program to pull something off?
They're showing up right here. Look at that. They're piling in.
Sell programs, bullish. Hope that helps. All right, we got one off. Thank God. So yeah, I'm gonna put my target down here. I would like to see weekly VWAP. I don't know. I would like to see.
Where do you have that at? Like 08?
Yeah, 08, 75, 50, something
exactly.
like that.
Yeah.
But also, somebody got me insanely sick, so I'm not trying to
I
get
thought
too
you
weird
sounded
today.
a little nasally.
Oh yeah, I mean more than normal. Yeah, I blame all the cheer moms that I had to be in a meeting with the other day. I think some of those cheer moms gave me some sort of nose cold, and now I'm stuck. The weather's finally getting nice, and I can't breathe at all. So yeah,
Pee pee poo poo. Why is that a freaking soundbite?
why?
Why did I need to say that?
I forget. That came from one of our shows. I forget.
It was somebody's name in the chat, and then I have one of my friends saved as that in my contacts. So
That's what it was.
yeah,
That's a clip. I said that. That was me. That wasn't you. You would never.
thanks, Merritt.
All right, guys, my time is up.
Okay. I'll see you at 306, I guess, because there's not a seller worth their salt in these parts.
I hope so. Fingers
All right.
crossed.
See you guys.
Good luck, y'all. See you.
All right,
Bye,
guys,
Chris.
take care. Merritt,
See you,
we'll see you
chat.
next week.
And then there were two.
Salma, what's up? I'm looking forward to this. I haven't seen you in a dog's age. How you doing?
Good. How are you?
I'm okay.
Yeah, feeling better? Not really.
No, worse.
Usually that's how it goes, though. You got to feel worse before you get better.
I did a very grown-up thing. Normally, I would just plan to ignore this until it got really bad. But I went ahead and went to the doctor yesterday, and I said,
Wow.
listen, I normally ignore this. Can I just get the antibiotics now? Because I know this is going to suck. Can we just make it suck less? And she's like, well, it could resolve on its own. And I'm like, are you freaking kidding me? The one time I actually try to do the right thing.
Hilarious.
I'm like, listen, I drove all the way out here. Can I get the damn amoxicillin? And she's like, all right, fine.
Well, I'm proud of you, even though she tried to get you to fight this on your own.
You can't win with these people. You can't win.
But chat is right. You should be taking vitamin C.
I already crush vitamin C all the time. Thank you.
All right, good.
I'm good. I'm making fruit smoothies. I'm a pretty healthy dude. This is just some cheer punishment in addition to the normal punishment that comes from cheer.
Oh, the things you do for Willow.
I know, that little turkey. She had a cool thing yesterday called a hit-a-thon, which is like a softball fundraiser thing. And the kids get to just hit. They get 15 balls, and she only missed 4. So she went 11 for 15 yesterday. I was like, that's incredible, man. So
11? Wait, she hit 11 out of 15?
Yep.
That's impressive.
Yep. Coach pitch too. I was like, man, this is good. Yeah, her hand-eye coordination and like her stance and everything has gotten so good this year. Very proud.
That's awesome. That is impressive. How old is she?
6.
Bro, what? 11 out of 15 at 6.
Yeah, man, she's good.
She's crushing it. That's great.
Yep, I'll turn those eventually. She can get that hand-eye coordination good enough. We'll start looking at a dom. Maybe next year I'll start showing her the dom. Be like, watch this. Watch for sellers.
You're trying to give her a headache. Still trying to give her first headache.
How you doing, chat? You all right? Everybody good?
Yeah, NQ Maverick. I agree. If the Knicks win tonight, I bet you Stowe will be feeling better tomorrow. He doesn't care about the Knicks, but
I don't watch basketball. I'm going to watch the Pirates game at 1. I got that going for me.
You should watch tonight. Last Knicks game was freaking insane.
Okay.
It was crazy. They came back from being down 22 in the last 7 minutes of the game, and then they tied it, went into overtime, and then they won. It was
sick. Okay.
Yeah, it was really, really cool.
Hey, Omni. What's up, brother? Yeah, I would also like to get down there. I don't know if that's happening today, dude. I don't know who this 15 guy is, but he sucks.
It's ES. ES is being stubborn. NQ already put new low day in, and ES is just not. It won't give up this weekly open. Just freaking knife. And Stowe, I know you always like me to update you on the Dow and the Russell.
What are those turkeys doing?
Absolute opposite of NQES. They ripped off the open and they're lingering near highs, whereas we kind of also ripped on ES NQ, but then we came right back down, and obviously NQ made new lows, and now ES is trying to do something here.
Okay.
So basically, YM Russell are much, much stronger.
Come on, sellers.
More.
I mean, they're trying.
I might just take it here.
11:07. Still got 20 minutes left of the Euro close, too. Look at this low. Again to the tick at 11:50? Look at this. Look at that line. 12. 74.12.
All right, I took 2 off there.
Insane. I was listening to you. I watched Jens yesterday trade the close, and you were talking about sizing stuff.
Oh, me?
Yeah.
Yeah, I just say random shit.
No. It wasn't random. You were talking about scaling out and how it's a challenge, and you were holding your whole TP. You were pissed you got stopped out when you went to take a trade.
It happened to me this morning too, guys.
Yeah.
I was short ES, and it was looking like real good, and then whatever freaking news that came out and pushed us higher got stopped out again. They just won't let Salma live.
I just wanted to tell you that I also struggle with that, with the evolving sizing stuff. Because the ES is NQ is easier for me because I never really touch a mini.
Mm-hmm.
I'm just in 4 to 8 micros.
Yeah.
Hey, I'd be low. Nice.
Nice.
It's a big passive buyer there at 10. Let's see.
All right. I'm down to 2 now. Look, I'm scaling out, guys. I'm learning. I'm trying. Doing it in real time in front of all you guys. And we moved stops to BE.
Nice.
There you go.
Yeah, I struggle with it on ES because I don't want to trade 20 micros. That gets into commission hell for me. And two minis is kind of that's my comfort zone. So now that I got half off for 1.25R, now I'm sitting here looking at 3R. What do I do?
So do you care about commissions on your personal account, or do you also care about it when you're trading prop?
They add up. They both add up the same.
No, I know, but I've never really I've never really given commission much thought when I've only ever traded props. So for me, it's it is what it is. But I imagine if I was trading cash, then I would be a little bit more mindful of, sizing and all of that.
Nice. Sorry.
Oh, you're good. This is good.
There's the weekly VWAP. Somebody said, "Where's the passive buyer, Stowe?" I will zoom in for you right there. 74.10. All this red is passive bid. And we ticked the weekly VWAP to a tick. NQ not quite at its overnight low. I'm gonna let this resolve itself. We'll see what we get. I'd like to see the overnight low run on both of them.
Oh my God, I haven't even been paying
so I'm
attention
watching
to
here.
chat.
Aren't you the secretary of chat?
I know. Sorry. Hi, chat. How are you guys doing? How you doing?
How you doing?
Come on, don't do this BS. Yes.
That's cool. We messed with this for 1,000 years, so we can come back up here and reject if it's gonna go lower. They're gonna squeeze off of that. That's fine.
Well, NQ still hasn't made a new low.
Yeah, I know. It's a real thorn in my side today.
Yeah, I don't love this.
Sticking in my craw, as they say. That
I would
low's
like to
fine
see.
now.
Wait, what's your target, Stowe? Because you're trading ES as well, right?
Yeah.
I have 402. What about you?
That'd be good. I would really like to see previous day low if we were gonna go do something, but I'm gonna get out. Yep.
Previous day low, like 73, 76?
I realistically, the weekly the weekly VWAP was the target, and we literally hit it to the tick. I should have just got out at 08. Previous day low for me is 76.75. Yes. So
You mean 73, 75?
no. Remember, we look at these differently. 73, 76, 75.
Oh, yeah. Okay.
That's
No, that's the same one.
Okay.
I thought you said 76, 75, and I was like, whoa.
No.
Sorry.
No, my voice sounds like it's coming through a balloon. It's like I've got Leo's voice changer thing on today. Stowe for a cig today.
It's funny.
I still trade NQ. What the hell are you talking about? I mean, if there's opportunity on ES, I'd rather trade ES. It's a little more bang for my buck, and if it's moving, I mean, how many points? I got 35 points of range today. If I can't make $1,000 and 35 points of range on ES, then I should retire.
Wow, this is a nasty, nasty bounce. What the hell?
Shameful bears.
I'm out. They just took me out. That's cool.
You scaled well. You did great.
Not good enough.
Dude, we can't
re-short this VWAP touch or what?
No way. Not a chance.
This is just a very strong bounce.
I like this 30 though. We got over that? All right, let's see. That was exhaustive at 30.75. Let's watch what it does.
Oh, wait, that was news. Brother.
What happened? Oil's oiling again? Something?
Bro, who knows?
I'm newsed out, man.
You and me both. I'm over it. It's frustrating and exhaustive. Exhaustive? Is that a word?
Yes.
Okay. Exhaustive. I would want to try shorts again off this 28 level. Just not sure where I'd put stops. Maybe 10 points.
I'm watching it. I don't hate it. I want to see this 28.25, 28.50 guy get filled maybe. I mean, NQ matters to me also right here. I like NQ to get to 270. I don't know. There's a passive seller right here on both. 28.50 got filled, and then we pushed down.
Listen, this was the headline Tracy just posted. We've made some progress on Iran. Oh my God! Yay! Let's use that to pump the market.
I hit it
We've
again.
made progress. Like, bro, it's the same thing. Sorry, go ahead.
It's all good. I just said I got short again.
Oh, you did. You did it.
Yeah, I don't know if it's gonna smoke me or not. It looks like it's about to.
So the thing is, ES made new lows, NQ didn't. That is technically a bullish SMT. I don't know how much I don't know how much I like that, but I might just sit tight here. Might just wait.
Well, SMT D's nuts, Selma. That's what I think.
Bro, don't let the ICT people hear you. Oh my God.
You're
gonna get canceled.
For them in the back. You can't cancel me. I'm too old to cancel. Might be too nice to cancel also. I mean, just pretend. Just pretend you want to do it, seller. Just pretend you want to go back. No, you don't? All right. Bunch of posers. You should all be ashamed of yourselves, bears. Yeah, I mean, it's not a bad low. If anything, I really don't like NQ's low.
Yeah, NQ's low is ugly.
So just the way, I mean, as divergence aside, I'm just joking. But there is a big passive seller here on ES. There's also the same passive seller on NQ at 242, 245.
NQ, I would have liked us to sweep like this 113 level. So I agree with you. That low is pretty ugly.
And like we get up here and they're not crossing at they're not doing anything to go. Like they have liquidity. I don't know if you can see this. Yeah. So they have liquidity up here parked at 29.25. This is just what they're doing at the moment. It's just like up here when we splashed up there to 30.75, not a lot of interest at all. So, and then same thing is going on NQ. It's really thinned out up there at like 250 for now. Not to say that they can't go get it, but this is an auction. So I'm just trying to lean on it for the sake of NQ. If it wants to come zip me out, that's fine. My entry at 26.25, not awesome, but you can't. Beggars can't be choosers with that. So what we need is a push here past this 24, and then I'd like to see selling stack on top, and then we'll head down into this auction. But this is our auction right here for now, 24 to 29.
What's your entry on ES?
That's 26.25. It's really bad.
Oh, you're basically hovering at break even.
Yeah, it should be here. It should be at 28.25. I just hit it late. I saw this, and I hit it late.
Just need this 28 level to reject.
We've come back and smacked into it enough times. I don't. Where the hell did my Dom go? There it is.
Gene, I watched it. Yeah, I watched that movie. Have you seen the Michael Jackson movie?
No.
It's a good one.
Any good? Cool.
Mm-hmm.
I'm watching Dune at the moment. And what else am I up to? I started some new show on Apple TV last night called Widow's Bay or something like that. It's like some mystery. It's got some actor I like in it a lot. I don't know his name, but I just know that I like him.
You're like, I like him, but I don't know who he is.
Yeah.
It's
What the
okay.
hell
I'm
is-
really bad with names too.
No. I'll find it because I should know. This is actually what I wanted to do.
Yeah, Stuart, I watched it.
The hell's this guy's name? Matthew Reese or Tom Loftus? This dude ring a bell?
I don't know. I don't know anything about actors. I need to see faces.
That's fair.
Who am I looking up?
His name is Tom Matthew Reese, Rhys. He was in. So there was this HBO show called Perry Mason, which was so sick. Kind of after the oldie timey Perry Mason, which I used to watch with my grandfather back in the day. But ever since then, I'm like, I'll watch anything this guy's in. He's just one of those dudes for me.
Cool. Yeah, I've never watched any of his stuff. Now chat's gonna start coming for me again.
I know, same, Anthony. Me and Anthony have a lot of the same taste in movies and music and stuff I've discovered. Have I seen
Anthony's
The Americans?
a cool guy.
No. I think it's on my list.
I kind of want to take shorts here with you.
Oh my lord, look at this turkey now.
What?
So up here, 7430, this 1,000 lot guy just showed up. So either this is going to be super annoying magnet, or we can finally push off of this. We do have a little guy to fill here at 2375. I jokingly referred to this as my 100% win rate strategy, but it's odd that ES leaves these sweeps as they move through ranges. So we'll see what happens here. 2375 should fill them. And we have passive buying here at 2450. Yeah. F minus. He's in the Americans? Oh, cool. Okay, great. Well, I'll definitely put it on my list then.
Fractal trying to bait me. I know what you're doing. 5-minute close above this 28 level and I'll exit unless my TP hits by then. What time is the XY show today? So me and XY will do trade the close later, 2 to 4, and then XY show segment will be from 4 to 5 p.m. Eastern time. So you got to stick around after trade the close. All right, they want to push this. Yeah, liquid flow. You can say that again. Annoying price action indeed.
Let's see. Get back below that 2875. I got out, then back in. I didn't want to take a full stop. Didn't end up needing to.
Oh, this candle's moving weird, dude.
You're watching Q too. Yeah, it's a pain in the ass. This is a ton of passive sell right here. And they stack behind it, but I need NQ to pull off here 50s and go back in. There you go.
Okay, production, do you mind putting up the graphic of XY's segment later today? Because a bunch of people in the chat don't know what it is. So I can just explain it real quick.
Plug it. Shill that shit.
Plug it. Can't shill something that's free.
Sure you can. We do it all the time.
All right, yeah, we'll wait for production to do that, and then I'll explain it. There's not much to explain, guys. It's just him and Jim will be on from 4 to 5, and he'll just be explaining his strategy and his edge. and basically teaching you guys like what he looks for when he's about to trade. It's educational. Will it be recorded? Yeah, of course. I mean, it's going to be part of the live stream, so you can always come back and watch these. And there will be a Q&A too, by the way, guys. So come with your questions.
That was interesting.
Tell me what's interesting about it.
Okay. Came up here. There's a little Dom stuff for Jens. If Jens like the Dom stuff. Came up here to 74.30. There was a large amount of resting liquidity that got added to the book here. And right in front of it, there was an iceberg also for just $500, but it's always good to note whenever you see large liquidity appear and we get to it, if there is iceberg related stuff around it. I don't know. You can kind of count that as the total tally. So I assume that these people are part of the same program. Went through it and immediately rejected off of it. This is also the +1. I've got this 74, 29.75 level. This is like the weekly +1 also. So we're kind of fighting with neutral territory right now. That and the fact that there has been a seller around today makes me interested in selling this and not looking for a breakout, because we keep rejecting the weekly +1 and this current +1. So I'm kind of trying to align all different time frames and get a bias, right? Which is neutral-ish. Of course, shorting is a pain in the ass and never easy. So it's been hard, but I still don't hate it. And NQ is kind of doing the same stuff. This little brick-a-brick thing that we're in right now, though, is terrible. Like, look at this range. Yeah, disgusting. You sicken me, Bears. That's why it's so hard to be friends with you. Oh, yeah, a couple weeks, Jerry. A couple weeks. We got to make sure it works, you know. I mean, there's a lot of testing that goes into stuff so that we make sure that it doesn't suck before you guys get it. I know that might come as a shock, but it's not that easy to just put stuff out. Otherwise, my journal would already be out. But like, I've spent 2 weeks with that, and man, we cannot fill that 23.75 guy. Look at that. Horrendous. But yeah, should be soon. I'll pull this down.
I have a feeling all day price action is going to be like this. Up, down, BS.
It's a pretty big range. Overnight, a pretty big overnight range. Yeah. So I don't know. I can see either one. Happening. There certainly is a seller up here on NQ and ES. So I don't like it, but I've chosen a position. I'm trying to stick with it.
No, it can work.
We're going to close in 1 minute, and that could help or hurt. We'll see. See if Europe makes up its mind either way.
If the 90 EMA crosses over view up, I might have to flip, but that won't be for a few minutes. As of right now, these shorts still look good.
I mean, this is our mini auction right here. Blue team, little baby red team. I gotta say, This is ridiculous. Nothing is sillier than this. I tell you what, if I was trying to buy that level a million times, there's no way in hell they'd let me get away with it. But right now, it's printing 4 points about every 90 seconds. But if I was buying that, no way in hell.
All right, come on.
I need a mute button hotkey
Why?
for my coughing. That's what pros have. Like if I was a proper radio dude, I would have a little mute button hotkey for coughing.
Wait, do you have a mic like this?
Yeah.
Okay, you can just tap on it.
I do have a mute key on there, don't I?
No, it should just be tappable.
Yep. Oh my God, is it going down? Am I hallucinating? Is this a fever dream?
Don't jinx it.
Okay, sorry. Maybe I should stop looking at it. Dude, Frin Tin Tin, that's a good idea. Foot pedal would be sick. Fun fact about me, though, I do not use any guitar pedals. I just use a tuner, and I use volume and tone knobs on my guitar to go from clean to distorted channels.
I don't know anything about that.
Yeah.
Woo! What the hell?
We got one. I almost celebrated it and coughed up a lung at the same time. All right, I took one off for 10 points there. We'll watch. We'll see if we can get back to the 74.12 guy.
You know
this
what?
Is
I'm gonna
hilarious.
practice taking trims.
All right.
Let's go.
And back to that conversation, I think you're still trying to figure out what kind of trader, like, you might be as far as targets go. I don't know, because everybody's different.
No, so like I know the kind of trader I am. I like to get in and I like to hold, whether that's for TP or stop loss, right? So it's always, I think me and Chris are similar in that sense, where it's either going to be one or the other, right?
Okay.
And I can sit and wait for a position for hours. Like I don't lose patience. Like I of course I lose patience. Like I get annoyed, but like it won't be enough for me to get out of the position. I'll still stay in. The only thing that I would say is I've seen it reverse on me one too many times, where I go from green to red, and that's where the whole like scaling out is something I should be doing. And yeah, I gotta practice it. I definitely have to practice it.
I would just try to quantify that if you can, and like do the best you can to math it out and see if in reality that's just an emotional feeling that you're going green to red and that's pissing you off. Because that, like, I can't trade like a lot of people because that pisses me off. I don't like it. So I take partials everywhere, and I don't care if it eventually goes to the target. I'd much rather have money and be done.
Right.
But some people are like, if it comes back and stops me out, that's great because they get 6R or whatever on average. So
yeah.
I think it just becomes a personality thing. It's just more comfortable for me to trade with, like, I don't know, taking the size shots that I take.
So like I said this yesterday on stream too, I don't know if you caught it, but like I think it would be so different if I was, let's say, in 10 micros, then I can definitely have like 3 different like TPs where like I'm taking 3 and 4 off, at different spots. But like when you're sized with 3 micros as is, it's a little bit like harder to try and scale out, like what am I gonna, like in my head, I know it might sound silly, but like right now my target just hit and I took 2 off. Now I've got 1 runner left. Like, is it even worth having this 1 runner? And again, it's like it's a dumb thought to have, but yeah, that's just the way.
I don't think it's dumb. I mean, you got to look at it like, I think you're touching on 2 different things there. Number one, you might beginning to explore the idea of asymmetric risk to reward, where the closer you get to your target. I mean, I'm actually in it right now, and I'm going to get out. So, I was in from, I don't know, 28, and ultimately the target is 74.07. I'm risking 3 or 4 points from this 28 short to get to 74.07. But when price gets all the way to 74.14, I'm no longer just risking 4 points of loss. I'm now risking 14 points of loss plus 10 points of profit to make an additional 10 points. So that becomes a upside down risk to reward trade, especially when we get to the other side of value, which is where I would normally look for a responsive buyer and get out. So not to say it can't. No, thank you.
Nowadays, everybody wants to talk like a
Oh my God. I get that. So like, I've never even thought about it in that sense where, I'm in profit 10 points. My stop loss is for 5 points. Now when it goes back to BE, or if it hits my stop, I've basically risked 15 points. And that's not something I've ever really thought about it like that. That's a cool perspective. That's interesting.
Yeah.
I don't think I've ever really thought of it like that.
It's good to have like realistic targets in mind, and then that helps create that. Because if you don't have the target, you can't do that math to begin with. So like, I know I'm trying to get, what am I trying to do? Get to the overnight low? Okay. That's 74.07. I'm looking at 20 total points maybe for my idea. And once I get more than halfway there, I got to get out if it looks like it's going to reverse, because like I'm leaving money on the table.
Yeah. I got to think of it like that. Interesting. That's like something I spoke about with Jared Tendler when I had my like therapy session with him. I was like very upfront, honest. Like, I'm okay with it going to stop loss. It's so weird. Like, I'm okay going from green to break even to red, but I'm not okay with going from green to like, if I got stopped out B. Like, it's a psychological thing. I don't know. I think I'm the opposite of most people, where a lot of people struggle with risk management being too conservative. Like they've got too tight of a stop loss. That's what they usually complain about. Like they get wicked out and then they watch it go. I'm like like I'm very loose with my risk management. Like I'll have like a wider stop, or I'll be okay with it going, red. It's not good. Like that is something we spoke about, and yeah, it's not good. I'm well aware of that.
I forget what
gotta change.
Forget what holes he found in my game, but there was a lot of them. I should go back and rewatch that and see see where I'm at now. I bet it's hilarious to watch that a year later. Oh yeah, Omni is correct. Maybe I stole that from Dante. It's possible. I probably have never come up with an original thought. Something has always come from something I heard, but that helps me look at it like that. Yeah, it's just a painful floaty day right here. That's it. Totally balanced. Annoying. Stowe, why are you shorting today in a bid market? This market condition is exactly the YouTube video. Like the YouTube video, this is how I buy and sell higher. No, it's not. No, it's not. Let me explain. All right. It was for a second, but now it's changed. This is how you have to look at the way that the VWAP bands evolve throughout the day. So this was a consolidation. If we're just looking at ES, this was a consolidation that found a bid and immediately left. This turns into a trend that is, identifiable from, let me get over here so you can see it. All right. So consolidation, trend, identifiable because we're hanging out in the upper band. We then leave the band and we come down and we test the -1. So this is, if this is going to be a trend day, this is a good entry. However, it wasn't. It was for, I don't know, 5 points, but there's a seller that kept stepping on this. And if you look, they stepped on it once, and we got into the lower band, stepped on it twice, stepped on it again here. This becomes a really back and forth trade. This is very two-way. And if you notice, these bands have flattened out and they're contracting. They're getting smaller. So when that happens, this is becoming a balanced day. Now we might go talk to this volume up here, or at the end of the day, maybe we'll come talk to this volume down here, but this is not buy high and sell higher action. This is fade the edges for me. So I'm trying to fade this edge up here. So this trade idea is I'm trying to fade the top half of this range, and this 74.30, I'll bring this up, is also
Hey, someone called this hilarious.
Yeah, it is pretty. I mean, it's hilariously painful. So 74.30 is also the top of this LVN here. And it's the top. This is the +1 on the week. So if we can't get up here, we're in weekly neutral bullish territory. So this is a fade back to the weekly open. And this is what I eventually caught. And so now if we can't get up here, we're going to hang out in value. If we can't spend time on the other side of this node, we're going to hang out down here and fill this out. That's just how it works. So I've identified a seller on the DOM. I've identified some areas that I want to interact. Now, the thing that would be awesome is if we get above this guy, and then I can buy this thing up here. That's what I want to do. I don't like selling this. This sucks. But I would need to spend some time up here, come back, and show that we've rejected this 30 seller before I did that. And maybe we will. But you can kind of even see, I mean, you can see that the large LVN on the high time frame chart has kind of made its appearance here. And there's this little ledge guy here at 30. So what is weekly open? That just stands for weekly open. Mark. Oh yeah, I don't trade my I don't trail my stop. Just ever, because I get out based on order flow and less on structure. I mean, structure is such a weird word, you know? It's like, where am I going to trail it? Like, why would I trail this stop? I'm not looking for, like, I got in here. Yeah, this actually was annoying. So I got in here, price went nowhere, stopped me out, then got in again. Took one off at 19. I mean, I guess I mentally trailed it here. I don't know.
I'm still in this runner.
I hope I survive to come to the show tomorrow. I like trading Fridays, but I might not make it.
Well, do you need me to fill in?
No. Good
You gotta
Vibes
let me
Friday
know from
is
now,
mine.
though. You gotta let me know from now.
I will. Nah, I'm good.
I was legit thinking about making a nail appointment. I'm like, what if they need me? What if I got to step in? I'll make the appointment for after one.
Yeah,
All right, I think
this is a pain.
Yeah, I'm out.
Anecdotally, for daily fade the edges stuff, when these things are completely flat like this, I look at the 1.5s. That's why I have the 1.5s on my chart. Current one is at 34.50 for the plus 1.5 and 12.50 for the lower 1.5. If you really want to, I don't, so I'm not going to do it. But if you really wanted to hang and just see how price reacts in this first plus 1.5 zone and find a spot to lean off of, fade it back into balance, and then same down here. You got to wait for your entry because this can get, I mean, it gets messy. It's balance days are much messier than trend days.
Okay, I think I want to look for potential longs if we can get a retest of that 28 level. Looks
Mr.
like
Market
the 9
asks,
EMA
how
is
much
gonna
are
curl.
nails, Selma?
So it depends. Are you doing both hands and feet, which, I typically do.
Okay.
It's about $80 for
80
both.
clams. All right.
And then you got to give a tip. So you're looking at $100.
You get an enamel. What do we do? We do a gel.
We do gel. How do you know this?
I've been surrounded by women my
How do you
entire
know
life.
this? I was getting ready to respond. Powder gel.
Power gel. Okay, good.
Powder gel manicure, and then gel pedicure.
Nice. There you go. I know what all this stuff means.
300, Mr. Market. What girl is telling you her nails are 300 and she's... I hope you're not funding any girl's nails out there for $300 because she is ripping you off, my friend. But I can't trade live from the nail salon because they put cotton balls with like acetone on all my nails, and then I put my hands in a glove, and I gotta sit there and let it soak while I'm getting my pedicure. So I can't touch my phone. It's tough. It's tough to text and trade and do stuff. Market has been wonky since 7 a.m. Yes, it has.
Yeah. Yeah, this is, I mean, we're getting back to what Thursday has normally looked like for me. So that makes sense.
I want a retest of this 28. I have the limit set. That should give us the crossover too of the 9 EMA. Plus a 5-minute close above 28 just gives us a change in structure here. Dude, ES 15-minute is so wicky. It looks like an NQ chart.
Yeah. It's really nasty work. I tell you what.
Ridiculous.
It could be exhaustive there at 34.50. I don't hate this. Might be early.
Wait, what are you doing?
I'm short here.
All right, cool. Short it till where I get filled in my lungs.
That's the plan, actually. I'm going to take one off at 28.50, so we should be able to do a handoff. There's a dude buying 32.5 though. And there is some liquidity at 29,300 that might need to go. They might try to go talk to him. Come on, go get them.
Come on, give us a retest. Yeah, apple butter. I need that pullback too.
Okay, they filled that 29,300 guy. I made a little exhaustive tail up there. Tiny exhaustive tail on ES2. I'm going to come down here to view up. Pull this down here.
4 out of 7 of the Mag 7 names are at highs. The other 3 are lingering at lows.
As they should. It's a maybe they'll just switch and we'll go nowhere.
Chill.
Who's in the Mag 7?
All right,
Microsoft?
So, yep.
Let me guess. Let's do a game show. Microsoft, Google, Amazon, Netflix?
No.
Okay. That must be Fang Man. I was thinking of a different acronym.
So you got to this is how I kind of remember it. You got 2 that start with the letter M.
Okay.
So which
Microsoft,
one?
and
what's the big social media that all of our parents
Meta,
are on?
I forgot.
Yes.
I still call it Facebook.
Yes. Okay. And then you got 2 with A.
Amazon and Apple.
What phone do we? Yeah,
yep,
okay.
There we go.
Oh my God, stop.
It's going great.
Then think about the 2 biggest and their CEOs or like, I mean, I don't know if Elon Musk is still CEO, but they're the 2 CEOs are like the biggest and most influential, and all of FinTwit loves them.
I think he got to keep his CEO gig, didn't he?
I have no idea, but when I think Tesla, I think Elon Musk. So
yeah.
And then you got NVIDIA, Jensen, right? Like the black leather jacket. And then you got Google and Goog. So those are the 2 G words.
Okay.
But you consider them as one.
Are Google and Goog both in the Mag 7 like identifiable? Well, one's class A and one's class whatever, right?
Yeah, so like Google is like the one I would say. But yeah, like they're both the same. Whoa, why do I hear myself?
Jim's got his
Jim, what the heck? You threw me off.
We call that latency in the biz.
Well, you guys are both class A, that's for sure.
All right. Thank you, Jim. Good morning, man.
You too.
How you doing?
I'm doing pretty good. Watching you guys, watching your vibe.
Cool.
I like it.
Yeah, so how long is what? Stone Age? What did you call it? Dog age?
Yeah.
How long is that, Stowe?
A dog's age?
Yeah.
This is 7 years, right?
Oh, okay. Dog year is 7. No, it depends on how big the dog is, and it tapers when they get older.
That's true.
It goes down to 5 years when they're older.
I didn't know that.
Yeah.
Yeah.
Yep. It's like an expiring contract.
Who comes up with this shit?
Yeah, you got to roll your dog into the new contract before they get too old. Otherwise, you get assigned.
Oh, man. Great job. Stowe, you're
don't
so
make me
short,
laugh,
right?
Jim.
You're going to make him cough.
Sorry. Salma, you're not, are you flat right now?
Yeah, I'm waiting for a retest of 28. Yeah. I think if we can come down here, I have a limit for 5 micros long.
Got it. Okay. And Stowe, you're short right now, right?
Yeah, it's not awesome, but I am, in fact, short. I don't know what they're up to, but it just looks like a very flat day.
I'm not going to say anything. I don't want to jinx you.
Okay. Cool.
I'm rooting for you, man.
I don't know if I'm getting caught and then they'll go, but because I feel like Selma told me all the other things I don't look at are all being buttheads right now. So
buttheads is a great description. Yeah. Yep. I am with the bounce.
So Selma mentioned a little while ago, I just wanted to remind everybody, special event today after the bell rings. right after trade the close, we're going right into a very special segment called Develop Your Edge. And it's the very first Develop Your Edge. Me and XYZ. XYZ is going to do all the heavy lifting, so don't worry. And he's gonna talk about a strategy. We focus on volume profile and how he back tests and gets to the answer. So it's going to be really awesome segment. It's going to be a whole hour. And what makes us unique is we're going to try to be as interactive as we can with the folks in the chat. So if you get a chance to come and you want to see it and you want to have questions, if you have questions, just pop into the chat on the stream and just ask away. And I'll try to feed these to him as best I can. So it'll be a lot of fun. And we're going to be patient at the end of the day, and we'll take our time. And I can't wait. We're going to learn a lot from XYZ today.
Hell yeah. Yeah, anyway. Chad, you should go to that, man. Because, this is an opportunity that I wish I had when I was learning how to trade. You get to XY will tell you how he made his entire edge. And, I mean, sure. we all know he's good. So sure. you should go.
All right. Well, great job, folks. Let's give these guys a round of applause. And Salma, you're coming back this afternoon?
Yes, sir.
All right. You and XY, right?
Me, XY, and hold on, I'll tell you who else.
Awesome.
Me, XY, Leo.
Nice.
All right. Cool beans. Thanks for being here, everybody. And we're going to do a quick edge report, and we're going to end the morning stream.
All right. Thanks, Chad. See you, Selma.
Ciao, ciao. Bye, Stowe. Bye, Jim.
All right. E-mini S&P, I have this 10-minute candle chart. I have two different volume profiles. I have one anchored to the session, so it's going to accumulate volume, histogram bars all the way till the end. And then I have another one. I highlighted it blue. Hopefully you can see it a little bit better than that gray I had before. And this is just kind of from the initial balance forward, right when that bell rang. I said, all right, this is regular trading hours. Let's take a peek at if there's any divergence, any difference, anything like that. And oftentimes, as the day goes on, they're very similar, right? So you don't see a lot of changes. So what we did see, though, and I'm going to kind of drill this in a little bit more, so we can see it a little bit better. This was particularly interesting because we have the IB midpoint. And we have the top of the value area here a little bit higher at 74.28 3/4. The bottom of the value area is way down here, right below that pivot point. That's at 74.1425. So what we saw for a lot of the morning is we had sellers push us back down below that mid, below the top of the value area. As a matter of fact, in the 10-minute chart, we wicked through it once, twice, 3 times, 4 times, 5 times. And then 6 times we finally broke on through, at least temporarily. But sellers brought us back down. Where did they bring us back down to? Well, look at the wicks down here, right to the bottom of the value area. So this is really good value area trading, and you get that every once in a while on kind of relatively calm days. And it's good until it's not, right? Eventually we broke out, right? Eventually we broke out, and we're trading higher right now. And we're trading above, not only are we trading above this particular value area, but we're also trading above the session value area. Now things are kind of settling right around there. We have a little bit of a volume node developing as well. So it's kind of this value area trading on days where, the news cycle's been a little bit subtle today, thank goodness. So I look for that point of control in the middle, and I look for the top of the value area and the bottom of the value area for possible entries, and also areas that's where I want my stop, perhaps. So this is you could anchor this with the NinjaTrader desktop trading platform to any time frame that you would like to see. So it's particularly handy. The other thing to note on this chart, by the way, I do have the Sunday open marked off here at 74.10, and we wicked through it once only. We tapped it once, we wicked through it once, came back up. So we're finding a lot of buyers. And why is that important? Because it's kind of marks the start of the week, and there's large institutional folks that might want to get involved when we get back down to that Sunday open, which we did at least once today. I don't know if it's still going to be in play later on today or not, but 74.10 is marked on my chart. Now look we're driving back down to that point of control again. So it's a very important level, 74.25. I would be surprised if we didn't trade here again today. 25, spot 25, sorry about that. So we'll see. We've got a big cluster of volume there as well. A lot of price happiness going on in the E-mini S&P right now, as the stock index futures are off a little bit, but they're still crazy strong, above the 80 MA on the dailies for just about all of them. No, not even a 23.6% retracement from when this rally started. So it's super, super strong and staying sticky to the upside. So that is this morning's Edge Report. Appreciate everybody being here with us today. A little bit later, don't forget we have our start at 2 o'clock, a regular start time today. Shai's going to kick us off with the news. We're going to go through the regular afternoon process, and then we are going to do a special session end of the day, 4 o'clock to 5 o'clock. So relax, enjoy your lunch. Thank you for being here.